Hello everyone, I am Pratap here. We are at lesson 29.5. This is about how to use NeoStock software generated NIFTY supply demand zone chain reports. And this lesson is having dependency on the earlier lessons. In case if this is your first visit to our channel, please go to our NeoStock Software homepage. So at our homepage, you can find playlists. Click on the playlist, and all the earlier training lessons are available in a playlist Supply Demand Zone Price Action course. You click on View Full Playlist. Now you are able to access all the training lessons. You just need to scroll down to the bottom of the page, because here starting from lesson 1.1, all the training lessons are placed in an order. So that's why you should start your training from lesson 1.1. But you should learn all these lessons one by one according to my training instructions. That is very important. If you don't follow my training instructions, your learning may not be effective. So don't waste your time. So go to our Telegram channel. I provided the link to our Telegram channel in this video description. Go to the video description, find the Telegram channel link and join at our Telegram channel. At our Telegram channel, top of the window, you can find pinned messages. Click on the pinned messages, then you get access to the training instructions. One of the messages, in the pinned messages, you have all the training instructions are available. So please learn this course according to those training instructions. Then only your learning will be very effective and you will become a very good supply demand zone trader in the coming months. So this is a prerequisite for all the members who wants to learn this course in an effective manner. So after completing all these training lessons, then you get into lesson 29.5. This is about NIFTY supply demand zone chain reports. Okay. So first of all, what is a supply demand zone chain report? NeoStock Software supply demand zone chain report. What is that? You know that every stock is having so many supply zones and demand zones. See, if you look into this chart, this is a daily time frame. See here, you have a rally, base, rally is there with pro gap. You have drop, base, rally is there. See here, you have a drop, base, drop is there, supply zone. So every chart is having so many demand zones and supply zones. Our software identifies these demand zones and supply zones. You may ask a question. There are already some scripts are available that draws demand zones and supply zones in TradingView. So if you can make use of those scripts, you can get demand zones and supply zones. Then what is the use of this NeoStock Software supply demand zone chain report? This is the question you can ask. It's a valid question. The advantage with NeoStock Software supply demand zone chain, it is having a lot of intelligence in identifying the hidden zones. There is a concept called hidden zones. You already learned in lesson 9.3 and in lesson 9.4. In both these lessons, you learned hidden bodies and hidden zones concept. So the beauty of our software, it is able to identify all the hidden zones. Okay. Is that the only advantage we are having? No. Our supply demand zone chain report also identifies high liquidity zones. That is the main specialty of our software. You learned high liquidity zones concepts in lesson 21. In detail, I have explained high liquidity zones concept. So our software is having intelligence to identify high liquidity zones. To identify the high liquidity zones, multi-time frame analysis is required. Multiple time frames. It is having dependency on different income trades. You already learned income trades from lesson 11 to lesson 15. In between, in all the lessons, you learned about the concept income trades. Different time frames and income trades, price direction, all these concepts you have learned. And our supply demand zone chain analyze all these multi-time frames and identifies the high liquidity zones. And these high liquidity zones are having a higher success rate. See, identifying the zone is not important. There are so many scripts available, TradingView scripts available in the market. If you use any of those scripts, they will identify, they draw the zones. But they can't identify every zone. Because our software is having intelligence identifying how the other softwares are identifying the zones, same way it will identify. Apart from that, it will also identify zones based on hidden zones concepts. It also identifies the zones based on imbalance concept, where the imbalance origin. Sometimes some candles are not really a great rally candles or drop candles. Still, imbalance has started because the time interval is completed, the candle looks like short candle. Even then, if certain algorithm rules are matched, our software identifies even those zones where the actual imbalance has started. No other softwares are having such kind of special features. I mean the scripts which draws the zones in TradingView. And what else our software identifies? Our software also identifies the zones based on the dynamic views. At the time failed ERC candles comes into the picture. No other software in the market is having capability to develop such kind of zones. These are all the main advantages in identifying supply demand zone chain. Of course, apart from that, our software is having the other capability where no other softwares are having the capability in the market, like doing top-down analysis, identifying bullish, bearish trade setups, and identifying the zones with high supply demand zone chain, a strategy builder with different conditions, different strategies you can adopt. So we have so many features are available. What you are seeing today in supply demand zone chain software is a very limited features, but most important features you are seeing. Still there are so many advanced strategies you are not aware at this experience level. Maybe in the coming days you will be learning few more advanced strategies. All the support is already there in our software. Okay, so that's why supply demand zone chain report is very, very important. How we will make use of the supply demand zone chain? That is what I am going to explain. So in this course, in this video series in lesson 29, based on supply demand zone chain, I will be providing 2 training lessons. The first one is NIFTY supply demand zone chain, and the next upcoming lesson is going to be Bank Nifty supply demand zone chain. The same concept you can apply to any stock. Whatever you learn in Nifty supply demand zone chain, and one more example, Bank Nifty supply demand zone chain. Same concept you can apply to Reliance supply demand zone chain. Of course, at present we don't have Bitcoin data. Maybe in future if you support Bitcoin, at the time you can do the same analysis for Bitcoin supply demand zone chain. You can apply to gold or silver, but at present we have access to Nifty data. But in the upcoming, in future, I don't know when it is, but in future, one day definitely we may support all other instruments. At the time, same concepts you can apply to any script. Don't think that this concept is valid only for Nifty or Bank Nifty. These examples are good enough to apply to any concept. Okay, first of all, what kind of advantage we are going to get? We are in the supply demand zone chain from monthly time frame till 5 minutes time frame. We are generating different reports. Using these reports, you can do top-down analysis. And you can find the most powerful institutional orders available in the chart. You can identify. And these order flows are having more higher success rate to get execution. And many intraday traders or short-term traders or swing traders, they get huge profit margins using with the help of by doing supply-demand zone chain analysis. So how to do this supply-demand zone chain analysis? So let us start. Let's start with NIFTY. So this is the NIFTY chart. So let's go to the monthly time frame. First thing you should observe in the monthly time frame is EMA confluence. First of all, and also you should also look into price over extension. Now you see, earlier NIFTY is having a huge price over extension. Prices are moving away from the monthly EMA. This is monthly EMA because we are in the monthly chart. The EMA it is showing is monthly EMA. If you look into September 2024, there was a huge price over extension. Prices are overextended from the EMA. And now, last month, just completed month, that is the month of February, the price over extension is completed. The moment price over extension is completed, when price over extension completes, you already learned in our training course. Once prices reaches the EMA, price over extension will be completed. That is what completed. And after that, prices will be again started moving up, and again come down, again move up the swings, because stock market won't move like a straight line. You know that. Stock market always you see the swings up and downs. Now a new swing is started. Again come down, again move up. Such kind of price action you will see. But one point is clearly, we confirmed the price over extension on monthly chart is completed. Okay, fine. So now what is that we have to do? By using NeoStock Software supply demand zone chain, we can identify where is the immediately available monthly demand zone and immediately available monthly supply zone. So go to the NeoStock Software. Here I entered NIFTY 50, the code, and selecting the time frame as a monthly, and I am generating monthly supply demand zone chain report. See, now our software generated supply demand zone chain report. What will be there in the supply demand zone chain report? First, the heading is very, very important. Why? The heading will tell you which script you are using. We are using NIFTY. And which time frame you are using. We are using monthly time frame. What this software has done, it analyzed a monthly time frame, and also it analyzed other time frames also for identifying the high liquidity zones, and then generated all the supply zones and demand zones that are available on NIFTY chart. I think in my database, NIFTY data is available from 2014. So since 2014, it analyzed and identified all the available demand and supply zones. And the beauty of our software is our software also identifies pierced zones. This is another important point we should also focus. You already learned pierced zone strategies in lesson 28. The ongoing lesson is 29. The previous lesson 28, you learned pierced zone strategies. So that is the reason why. How do we know all these zones are pierced zones or high liquidity zones? That's why in the supply demand zone chain, always you look into the zone column. But before we get into this, one more thing we should complete. After the heading, you should focus on a date. And this is the candle open date it displays. It doesn't display current date. The open date of the candle. So this is a monthly candle. Monthly candle started on 3rd March 2025. You should ask a question. Actually, the candle should open on 1st March. Why it is showing 3rd March? Maybe 1st and 2nd March are holidays. So that is the reason why it is showing the actual data where it is started is on 3rd March. That is the way the candle date is defined here. This is the monthly candle. So that's why March month it has displayed. Okay, the closing price it displays, the current closing price in the market closing price. And also it also displays trend also, HTF. Because I told you while generating supply demand zone chain, our software does a multi time frame analysis. So because it is doing multi time frame analysis, I am displaying HTF trend, ITF trend, LTF trend. And whichever the time frame you selected while generating the supply demand zone chain, our software assumes your selected time frame as LTF. That is the way it assumes software. So that's why LTF trend is monthly trend. One time frame higher, that is a quarterly trend. And one more time frame higher, that is yearly trend. So this is the way in this report you are seeing the yearly, quarterly and the current month, the current time frame you selected. In the heading you see, that's why I told you understanding the heading is important. By seeing the heading, the current time frame you will understand. Current time frame should always be treated as LTF. This is how software performs the analysis and then identifies the high liquidity zones. So where to identify the high liquidity zones? To identify the high liquidity zones, always you should look into the zone column. So this is a supply zone, not a high liquidity, normal demand and supply zones. So this is a demand zone. But this one is not a normal demand zone. This is a pierced demand zone. How many times this zone is pierced? So far it is pierced once. That's why you should look into pierced column. And the tests and rejections, both together is a test actually. For my internal algorithm point of view, for my internal other calculations point of view, I just divided the column into tests into two parts, test and rejection. So that's why you combine both. Sometimes rejections includes tests. 2 times rejected. That includes one test. But that's why always you first look into the rejection column, whichever the value higher that you consider. So actually this is for my internal understanding point of view I have drawn. So software specific columns these are. So for your understanding point of view, you can look into rejections column or you can combine both the columns. Okay. So anyway, here whether the zone is a fresh zone or a tested zone, if you look into these two columns, you will get clarity. Okay, fine. And CIZ I already learned in lesson 21.1 video. Close, how many candles closed inside the zone so far. And pierced column is important column. Always you should look into pierced column because pierced column will tell you if a zone is pierced, how many times it is pierced so far. We have 2 pierced zones in the monthly time frame. The 7th, see the first column is hash indicates serial number. So this is the 7th row and this is the first row. I mean the 3rd row is pierced and the 7th row is pierced. These 2 demand zones. And so far how many supply zones are there in the NIFTY, the active supply zones? Only one supply zone. There could be so many supply zones in NIFTY chart, but all are violated. Violated, we don't focus on them. They are gone, that's it. Institutional order flows are gone. So the active supply, demand and supply zones, including pierced zones, you will display on the chart. Okay, some of the zones could be high liquidity. See here, the 5th one is a high liquidity zone. If you are not aware of high liquidity zones concepts, please complete lesson 21. We have multiple videos are there in lesson 21. I have explained high liquidity zones and also high liquidity zone strategy that you will use during intraday, having 80% success rate so far. Okay. And this is again another high liquidity zone, but this is a high priority high liquidity zone. This is a low priority high liquidity zone. All these concepts you learned in lesson 21. So in the total NIFTY chart monthly time frame, we have only 2 high liquidity zone, one high priority, one low priority. What is the TCO zone? How to identify TCO zones? These concepts you already learned in lesson 25. Okay, this is NIFTY. This is how you should understand. And what else you can look? ZA means zone achievement. Some of these zones are recently created. So not yet they have zone achievement, these stocks. So no achievement. That's why I'm keeping hyphen symbols. Here violated opposing pivot. Here violated opposing zone. Such kind of zones. See, zone achievement is important only for entry time frame zones. But if you are using monthly time frame as a HTF zone or ITF zone, zone achievement doesn't matter. We don't care about the zone achievement. Previously also some people asked these questions. In one of the Q&A sessions also I addressed this. Zone achievement is valid, applicable only for LTF time frame. If you are planning your trade in a particular time frame, that time frame zone achievement is required. If you are using mostly monthly zones, you will use as HTF zones or ITF zones. So we don't care whether zone achievement is there or not. Okay, what kind of strength it is having? You already learned in lesson 6 or I think maybe lesson 7. 6 or lesson 7, one of these lessons you learned zone strength. What we have learned different types of zone strength. High explosive, follow through candles, without follow through candles, sluggish. These are the different categories, or with gap, with pro gap. So those kind of zone strengths you can understand by looking into this. And rest you are aware of your leg-in date, timestamp, how many base candles are there, leg out timestamp, and the zone high, zone low, and between zone high and zone low, what is the risk? By default, zone high is a proximal one, if it is a demand zone. Our supply zone low is, that is the type 1 proximal. So here I am displaying type 2 proximal. And till the distal line means till zone low. What is the risk involved? And similarly, type 3 proximal line. Till the distal line, what is the risk involved? So those columns I have provided, they will be helpful to you later on when lower time frames, when you want to select a zones based on its risk point of view. If risk is high, sometimes you want to avoid those zones for your trades. So that way these columns will be helpful to you for your decision making. But most important thing always you should focus is on the zone column, pierced column, and lower time frame trend, that is current time frame trend. They will be useful to you. Of course, ITF trend, HTF trend also will be useful to you. Okay, first now let's start using the supply demand zone chains. So for higher time frames like monthly, weekly and all, you start using immediately available demand zone, immediately available supply zone, because they won't be violated immediately unless prices are very near to the distal line at the time of drawing the zone. But otherwise, monthly zone violation and weekly zone violation, it definitely takes few weeks or few months time. So first I am going to draw supply zone and demand zone. So what is the supply zone leg-in? 1st October 2024, after the 3 base candle, and 1st February 2025 you have a leg out. 1st February, this is 1st February. See, after the 3 base candles, this is the leg-in, this is the 1st October. So now I am drawing a supply zone. Monthly supply zone. See, I already explained when I am giving these monthly, weekly colors, monthly always we have very light color. After that, thickness of the color I am increasing so that you can, by seeing the color thickness, you can clearly spot this could be a monthly zone or this could be a weekly zone. Okay, this is the light color I have given, red color, demand zone, green color. What is the demand zone? Here we have a demand zone, rally 1, 2, 3, 4, 5. See, this is the dynamic view. It is a rally candle, failed ERC, dynamic view. That is the beauty of our software. Our software supports dynamic views. If you are using trading view related scripts which are drawing the scripts, many of those scripts will eliminate, they will not identify a zone here. But the beauty of our software, it definitely identifies this zone. Why I am saying definitely identify? Because I am the one developed this software. I know how the algorithm works. See in the demand zone, you see here first December 2023 leg in, after that 5 base candles, then July 2024 is the leg out. See, this is a third zone, not July, sorry. Third zone. Yeah, third zone. Third zone 2024, this is the leg out. See here, this is the 1st December. That is what it is showing, 1st December 23. After that, in between 5 candles, 1, 2, 3, 4, 5 base candles. So this is how we have drawn the demand zone. Demand zone, light green color I am giving. Monthly demand zone. But did you notice one important thing here? In this case, both monthly demand zone and monthly supply zone, they are overlapped with each other. And just now this monthly candle prices moved from the monthly demand zone and prices closed inside the monthly supply zone. Very interesting. If supply zone is violated, then the rally will continue. If demand zone is violated, then monthly trend will be changed to sideways, because the current monthly trend is uptrend. But the point you have to understand, price over extension is completed. But price over extension completed, it doesn't mean market again will start moving up. But there are higher chances. But there are times prices also will come below the demand zone and started moving down, right? That scenario also you have seen. But if you look into the past history, rarely you have seen prices going below the monthly EMA. See, monthly EMA is respecting NIFTY every time. See, it touch monthly, of course a little it will come down. And again, it touched and moved up. It touched and this is the moved up, and this is the first time came down. In the year 2008. 2008 there was a big global recession in the market. It continued more than 1.5 years, I guess, at that time, in 2008. Because I've been watching the market from the year 2002 onwards. This is 2004. So somewhere here I started watching the market. Initial stage I was looking only in the BSE charts, Bombay Exchange Limited, BSE. Now for the last 10 years or maybe 12 years I am focusing on the NIFTY charts. Because at the time NIFTY data was not stable data. Especially in early 2000s, NIFTY data is not stable compared to BSE, Sensex. So that's why I was focusing on Sensex. And I think from 2006, 2007, during that period, so many actions took place in National Stock Exchange, and then they have improved their servers. Data stability issues, majority of the issues, they are resolved. Still, of course, in any exchange we see freak trades. Sometimes the slippage will be there in the morning 9:15 candle. Maybe small, maybe one trade or two trades, they all of it are some 2% or 1% price will drop, and that order executes, and again sharply price within next second itself, or within that fraction of second itself, again price come to the normal stage. But the problem is the prices will be, those slippage will be registered in the price. Sometimes it looks like a big wicks for you. But they were frequent. Every day we used to see such kind of freak trades on NIFTY on every day. So that is what, they are all resolved now. Rarely now you can see only 9:15 candle only now. That too not every day, rarely. When a heavy order flows are there, this is the actually problem with softwares, any system. When heavy data will be there, the handling issues will come in, any performance issues will come. It is a known problem in the software systems. Hopefully, future even such kind of rig trades also we won't be seeing when we get even much super fast computers in the coming years. But anyway, see, every time you observe, see, this is the one time prices for almost some 6-7 months they were below this zone, EMA. Rarely you see, and here also once. But here you see price came and immediately moved up, came down again, immediately moved, came down, immediately moved up. And this is COVID period. Prices came down and few months it is a year below and then immediately. That means majority of the times when Nifty reaches this monthly EMA, it gets the support. That is what we call market is respecting the EMA at monthly time frame. See, again in the monthly prices came and moved up. Again came down, moved up. It came near but it didn't touch, again moved up. Again this is the time you see, it just came down and again moved up. Now is the rally is going to start? That we can't tell anything. Possibility is there, that is what we can tell. Nobody can predict the future, right? So we say there is a possibility market will move by seeing this historic data. There is another possibility is there, again market will come down, near to the EMA line it will come, maybe it may not touch, near to the EMA it will come and again it will move up. These are the different price actions will take place. But at present, what opportunities are there? How to identify those opportunities? That is what important. That is what we are doing with the help of NeoStock Software supply demand zone chain. So how our supply demand zone chain will help us in identifying the opportunities? That is what you should learn in this video. Okay. So we have drawn monthly zones and both these zones are normal demand and supply zones. See, until daily time frame, even normal demand zones also get weightage. No, there is no issue. See, demand zone is a demand zone. Monthly means strong order flow will be there. Demand zone, buy order flow. Supply zone, sell order flows will be there. So we have to understand that. When time frames are going down, then the order flow's strength may be reduced, but still there is some lower time frame order flows will be having a very strong order flows. They are the exceptional zones. Those zones we are naming it as a high liquidity zones. Okay, so we have drawn the monthly zone. Now let's shift to weekly time frame. Did you notice? This is weekly EMA. This EMA, earlier the one you seen on monthly EMA, this is weekly EMA. So one point I forgot to mention in the monthly time frame, generally at monthly EMA, it's better to draw a line, horizontal line at here. So went to the horizontal line so that we know somewhere here. Let us check. Yes, exactly here we have EMA line we have drawn, and this is I have already created a monthly. This is a monthly EMA 20, MEMA 20. See, it changes the color to black and it has given the text also monthly EMA 20. So that anytime we know this line is monthly EMA 20. And monthly EMA won't change quite frequently. Slowly monthly EMA will change. Okay, now we are going to weekly. So here you have weekly EMA. So let me draw weekly EMA here. Let me change the color and the text with the WEMA 20 template. So this is displayed with blue color like W weekly EMA 20. See the gap between monthly EMA and weekly EMA. From monthly EMA, see here prices reached, these are the weekly candles, and then prices were started moving and they reached monthly EMA. Sometimes what will do, prices will go a little above and again come down. Currently see what is happening, earlier prices were above EMA. So weekly EMA price over extension is completed on, it reached the maximum on 23rd September and then prices were started coming down. EMA extension is completed. Even then prices went down, and from here again they moved and took support here, and then again came down, again moved up, touched the EMA, came down, again moved up and touched the EMA, came down, and now again touched the EMA. Now what will happen? We don't know. Anything can happen. It may come down market again, or this is the time, suppose let us assume the overall trends are getting changed. If that is the case, now market will be started moving up. It will go up and again it will touch and again move up. What you have seen after it crossed the EMA, what kind of price action? That kind of price action you may experience. It will go up and again come down, again move up. Okay. Possibilities. We can only discuss the possibilities, but we can't predict the future. But one point we should understand, now it reached the EMA. Anything will happen here. Okay, what is going to happen? We will discuss after drawing the entire supply-demand zone chain-based analysis. Okay, now let's draw the weekly zones. Previously, we have drawn monthly zones. But one point I forgot to, generally what I do when I do this supply-demand zone chain analysis, I will give the text. Let me add the text here. So this is the monthly demand zone, normal demand zone. Okay. And this is the monthly supply zone. Okay, now let's go to the okay, now we are in the weekly. I just changed the text in the monthly zones. Now what are the weekly demand and supply zones immediately available? So this is the monthly supply demand zone chain. So still if you want to mark any zones below the monthly zones, if you want to mark, you can mark, nothing wrong. But what I am feeling, this is good enough, because monthly zone violation takes place in a rarely, not immediately. It takes some time. So I am going back and now I am changing the time frame to weekly, generating weekly supply demand zone chain. So this is weekly supply demand zone chain. So what is the immediately available weekly supply zone, immediately available weekly demand zone? That is important, because you have so many weekly demand zones are there and a few weekly supply zones also there. What is the nearest to the current closing price? The last supply zone in the supply demand zone chain is the recent one. And the first demand zone in this chain is the recent one. The last supply zone in this chain is the third one. And the first demand zone in this chain is fourth one. So that way you will identify where you can find both demand and supply zones. That is the nearest demand zone and nearest supply zone. That is how you should understand this report. And what about second one? This is the one supply zone above this. If this supply zone is violated, then this is going to be the active supply zone. If this is also violated, this is going to be the active supply zone. This is how you should understand. And here you have high liquidity supply zone available, already tested 2 times. And also here you have high liquidity demand zone, weekly demand zone, but this is the low priority high liquidity demand zone. It is a TCO demand zone. Just now I think it is created. 17th lagout is 17th. So last week it is created, this zone. Okay, what are the active demand and supply zones? So to the current closing price? To the current closing price, nearest, not active, nearest is the right word. Nearest demand and supply zone, fourth one and third one. So let's draw both these zones in our charts. Okay, third supply zone, already tested once. I think price closed inside this weekly supply zone now. Let's see. When this zone is created, when is the leg-in? 27th January is the leg-in. After that, one base candle, 10th February is the leg out. Okay, 27th January is the leg in. This is the one, 27th January. Rally base drop. See the pattern. Pattern always tells the pattern. Here rally base drop. This supply zone. In rally base drop, whichever the highest among the three candles, that will be the distal line. So base candle is having the highest value. So we can draw the zone here. So let me draw weekly supply zone color. See, weekly color is a little thicker than monthly color. You already learned all these things in lesson 9.1. I explained lesson 9.1. So that is our first practical session. See, this weekly supply zone is having weekly EMA confluence. Exactly that weekly EMA confluence level prices reached. Okay. And what kind of zone it is? This is a normal supply zone. So let me add the text. This is the weekly supply zone. Okay. The important point you learn here is this weekly supply zone is having weekly EMA confluence. What about monthly? That point we didn't discuss. See, monthly demand zone is having monthly EMA confluence. Did you notice? Monthly demand zone is having monthly EMA confluence, and a weekly supply zone is having weekly EMA confluence. Because of these reasons, maybe there is a possibility. What possibility? Weekly supply zone again push the prices. It will come down again, it will go up, and again further order flow may consume anything, again it will come down, and finally this weekly supply zone might be violated. That possibility will be there. Or maybe if the demand is super strong during the coming week also, this weekly supply zone will violate. That possibility is also there. See, you can't rule out any possibility. You have to analyze all the permutations and combinations. Okay, let me go to weekly time frame. So we have drawn the weekly supply zone having weekly EMA confluence. What about demand zone? Demand zone is a high liquidity zone, but low priority high liquidity zone. TCO demand zone. You know what is a TCO demand zone? This demand zone is responsible for the trend change. That is what you learned in lesson 25. Okay, now what about the trend in the weekly time frame? The trend in the weekly time frame is sideways. That means earlier trend was a downtrend. Now the downtrend is changed to sideways, and this demand zone is responsible for the trend change. So definitely this demand zone also you might be having a strong institutional order flow. And zone strength is not yet identified. Maybe some more candles are required to confirm the strength of the zone. Maybe by end of this week, it will identify the zone strength also. Until then, null value will be there. Null value indicates no value. I mean, not yet decided. Okay, when is the leg in? 3rd March 2025 is the leg in. After that, one base candle. 17th March is the leg out candle. Okay, 3rd March 2025. This is the one. 3rd March. Rally, base, rally. Let us check the same. See here, RBR. Rally, base, rally. So let us draw the zone. Rally, base, rally. This is a large candle. This is high explosive leg out. This is a weekly demand zone. Maybe it is not a high explosive leg out. If it is a high explosive leg out, the zone strength might have been already defined as a high explosive. Maybe it is little shorter than high explosive calculations as per our software algorithm. Maybe manually you may feel this is high explosive, but why software is not identified? Because it looks into all the other candles on the chart. Then it will do its own calculations in determining. Maybe it is little shorter. Maybe some more value mode, maybe it would have identified. But anyway, next week it will see if there is a follow through candle, it will give the strength, or if it is a base candle, it will identify. If it is a sluggish, it will wait for few more weeks and it will confirm. But anyway, that is not important for us. So here we have a weekly demand zone. And weekly color is a little thicker compared to the monthly color. And where is this weekly zone? Weekly zone is overlapped with weekly demand zone. What about weekly supply zone? Weekly supply zone is overlapped with monthly supply zone. Very interesting, right? And also, did you notice this weekly demand zone is having monthly EMA confluence? This weekly supply zone is having weekly EMA confluence. See, the blue color line indicates weekly EMA and this black color indicates monthly EMA. See, monthly EMA is overlapped with weekly demand zone. Of course, this weekly demand zone is overlapped with monthly demand zone. Which is having more power? Obviously, monthly. Monthly confluence is much power than weekly confluence. Of course, both are powerful. There is no doubt in that. But when you compare both, obviously this might be having even much more power. Even if prices are coming down, maybe this weekly demand zone again push the prices up and next time this might be violated. Anything can happen. I'm not saying it won't be violated now. There is a possibility now also zone will violate. But there are higher chances from weekly zone prices will come down and may reach up to this monthly zone, and once again it will touch the monthly EMA, and from here again it will go up and prices further will go down. That possibility is there. Further will go up. That possibility is there. But at present, the interesting analysis, the interesting points we observed is weekly demand zone is having monthly EMA confluence. Go to the monthly chart. See, this monthly chart is having weekly. Let me add the text also here. Weekly TCO demand zone. That means weekly high liquidity zone. Or I can also specify weekly HLQ demand zone. And this weekly demand zone is having weekly EMA confluence. So let me go to weekly time frame. Okay. Hope you got these points, right? Let me summarize again once again because it is important. I'm repeating same point again and again. Don't get bored with that. I'm trying to tell you, it is a message to you. It is a very important observation. Weekly demand zone is having monthly EMA confluence. Here weekly supply zone is having weekly EMA confluence. Here monthly supply zone confluence. Monthly EMA confluence, here weekly EMA confluence. Okay, that is one difference. And another observation is, here weekly demand zone overlapped with monthly demand zone. And also here weekly supply zone is overlapped with monthly supply zone. So that means both are saying, I am ready to fight with you. That is what they are challenging to each other. Because they have powerful parameters, powerful reasons to say maybe from here prices will go down, again from here prices will go up. To tell we have very strong reasons here. Okay, this is what we observed from weekly time frame. Very interesting. Suppose if this weekly supply demand zone is violated, what is the next weekly demand zone? Similarly, if this weekly supply zone is violated, what is the next weekly supply zone? That kind of doubts also you will get. So that way the supply demand zone chain you can use. Here you have a supply zone. This is on 27 January, after that one base candle. See here, 27, this is 2nd December. Sorry, I looked into the wrong one. 27 January is current one. This is the 2nd December and one base candle. 2nd December, this is the one. So that means same monthly zone, you have one more weekly supply zone. See, rally base drop. In rally base drop, rally candle is having a highest wick. See how institutions clever. In case they know if this supply is violated, they kept one more supply here, rally base drop. Not only that, I think they created one more LOTL also, drop base drop. Actually, this is the one we need to consider. When it is, this is on 30 September. This is the one, 30 September. This is the high liquidity zone. So probably I draw here because this is the valid one. I will draw from here. Did you notice? Weekly zone is origin to the daily, monthly zone. Weekly supply zone is origin. Which concept it is? Lesson 22 concept. What did you learn in lesson 22? Lesson 22 we learned the lower time frame origin to the higher time frame zone having a strong institutional order flows. So definitely this zone we should have strong. At the same time, this zone is a high liquidity zone. Our software identified it as a high liquidity zone. In high liquidity zone, many times you see new zones will be created so that institutions will again and again add order flows. See here LOTL zone is created, rally base drop. So that's why this is a very powerful. This is weekly high liquidity supply zone. High liquidity means high priority, high liquidity by default. Because this is low priority, I added the text low priority. This is a TCO zone. Even if this is violated, probably institutions would have already kept strong order flow here. At the time, once again, it will push the prices to the monthly zone. Again in the monthly, from some of these zones, prices will be moving up. We never know. Maybe institutions may create a new demand zones, weekly demand zones. Till that newly created weekly demand zone, it will push. It's all depending on what is the price action is taking place in the coming days. It is too early to predict. Okay. Similarly, what about the next weekly demand zone? The next weekly demand zone, pierced demand zone. You may say, it is a pierced zone, we can ignore it. No, now you cannot say. Reason? Now you already learned pierced zone strategies. Earlier you did not learn pierced zone strategies. But now you learn. Because you learned pierced zone strategies, the new order flows in the pierced zones are very powerful. That is what you know. So let us draw this zone. Any new order flows inside this zone may help in pushing the NIFTY up. So when this pierced zone was created? On 11/3/2024, one base candle. 11/3/24, right? 11/3/24 and 26/3. This is 26/3. This is the one drop base rally. So let me draw this zone. This is a weekly supply zone, but it is weekly demand zone, not supply zone. Weekly demand zone, but it is a pierced zone. See here, this candle pierced. When it happened? on budget day. This is third zone 2024 on budget. Budget day, sharply prices came down and then sharply prices moved up. While moving up, if institutions creates any new order flows, those order flows might be having a very strong order flow. See, recently Nifty is falling from where it took the support. See, it went into the pierced zone and then started moving up. Why? There could be lower time frame order flows will be there, that we will see in daily or 75 minutes. That next we will see. Those order flows might have pushed the Nifty. See, all these days Nifty is going down. Nobody expect pierced zone we have order flows. First of all, there is no pierced zone concept. People would have deleted this zone from their charts because it is pierced. Pierced means, according to them, it is a violated zone. But you land, pierced zone is a special concept. In your phase 1 training itself, you land pierced zone. But the importance you land in lesson 28, pierced zone strategies. So this is the reason why we have drawn this zone. So this is a weekly pierced demand zone. So this is very, very important. So we have drawn two zones, two weekly zones. Who helped in identifying these zones? Our NeoStock Supply Demand Zone Chain Report. That's why these reports are very, very important. Okay, now you did a Nifty weekly analysis. And the next zone, is it there inside the weekly or below? Let us check. Below that there is one more demand zone. When it was created, 22nd May 2023. Okay, it is somewhere far away. Here. This is 13th May 23, right? 22nd May here. Sorry, this is March. Sorry for my mistake. April, May, 22nd May. Here, rally, base, rally. How many 4 base candles? Yeah, 4 base candles. 26th is the leg out. Okay. So our focus will be only on these zones. I think we looked into a wrong one. There is one more, 13th November is also there. This is the one. That is what I am wondering. Why there is a zone here, how it is missed. So this is the one. There is a rally, base, rally. This is the nearest one to the current one. Rally, base, rally. All of a sudden I just surprised how our software missed this zone. Again I got doubt and I saw we marked a wrong one. This is the one. 13th November. Rally, base, rally. So sometimes human errors, but we blame the system. That is what I did. I blamed my software why it didn't identify this zone. But actually it identified. I selected the wrong one. Okay, anyway, they are all below the monthly zones. Time being, they are not important as long as monthly zone is alive. So our focus will be on these two demand zones and on these two supply zones, weekly supply zones. Okay, with this we have completed our weekly drawings. Next we will go to daily time frame. So changing the time frame to daily. See, now prices moved away, moved out of, crossed the EMA daily. Previously also happened. Prices moved up and again came down to the below daily EMA. Let us see what is going to happen now. Because here we have weekly supply zone is here. We have a weekly supply zone. Weekly EMA confluence inside weekly supply zone. This may again push the market down, that possibility. If that is the case, once again prices will go down below the EMA. That possibility is also there. Okay, next I am generating a daily supply demand zone chain, changing the time frame to daily, generating daily supply demand zone chain for Nifty. So this is the Nifty daily supply demand zone chain. What is the first thing we should do? We should identify the nearest demand and supply zones. Of course, before that you will go through, yes, this is the daily time frame, and the daily trend is uptrend, weekly trend is sideways, and a monthly trend is uptrend. These observations you have to make by looking into this supply demand zone chain. And more importantly, what is the important thing you should identify? What is the nearest demand zone to the current closing price, nearest supply zone to the current closing price? Nearest demand zone serial number 7, nearest supply zone serial number 6. And surprisingly, both are high liquidity zones. Very interesting. First, let us draw this demand and supply zone. Supply zone, 6th February 2025, 2 base candles, and then 11th February 2025. So 6th February 2025. This is the one, 6th February 2025. You have a base candle 1, base candle 2, and then you have a leg out candle. This is the way we are identifying daily supply zone, DSZ. Where is that? Here. So let me give a name. Daily high liquidity supply zone, this one. This is not a normal supply zone. This is a daily high liquidity supply zone. And this daily high liquidity supply zone is inside the weekly supply zone. And now this daily high liquidity supply zone is also having weekly EMA confluence. Notice this blue color line. See the text, weekly EMA confluence. That is the beauty of drawing these weekly levels in a horizontal line, so that in the lower time frames these zones any confluence is there. I mean, these EMA are having any confluence. Now EMA confluence is there. Which one? This daily supply zone. Now daily supply zone is overlapped with weekly supply zone, and weekly supply zone again overlapped with monthly supply zone. This is the monthly. This is daily. Daily overlapped with weekly, and weekly overlapped with monthly zone confluence. That means the daily supply zone is the fine-tuned zone inside the monthly supply zone. It is a fine-tuned. You know what is fine-tuned? Okay, and what about the weekly demand zone? Okay, this is the supply zone, weekly demand zone. This is the one nearest. When it is created on 18th March 2025, 1 base candle, 20 March. Leg out. See, this is the 18th March base candle, and this is the 20 March. And this is not this daily zone is not overlapped with weekly zone. But the only thing is it is a high liquidity zone. This is the daily demand zone. Just above the weekly zone. Probably this zone is going to get daily EMA confluence. If daily EMA further move, maybe on Monday or Tuesday, it may get EMA confluence. But it is very close. It's like almost having EMA, daily EMA confluence, this zone. And here it is having a pro gap with a gap up it moved. See the leg out with the gap, the strength of the zone. And this is a S underscore DZ, daily high liquidity zone. So let me mark the text. This is a daily HLQ demand zone. But did you notice one point? This daily zone is not overlapped with weekly zone, but it is overlapped with the monthly zone. Okay, can we take a trade in this daily zone? Yes, you can. Because this is a high liquidity zone, overlapped with monthly zone, you can use this is like a aggressive trade setup. In case if you are planning for a bullish trade setup, aggressive trade setup kind of mechanism. If this is there inside the weekly, then it could be a fine-tuned zone, but it is not there. This is a low priority, but unfortunately, this zone is not having any daily zones. That means there are higher chances this weekly zone may be violated. This should have a daily zone. What is the next daily zone? A normal demand zone is there when this is 11-3-2025, 3 base candles. 11-3 rally, this is a base candle. Okay, interesting. See here, this is a rally candle, but this is a base candle. But again, this is a medium size candle. Medium size candle can be part of the base. This is also another medium size candle. That also can be part of the base. When you have a base candle, the follow through candles, the next candles are leg candles, medium size leg candles. We can keep it in the base. I already explained in the Q&A video. If a zone is having a base candle, the next candles are medium size candles before the leg out. Then they will be. You may ask a question. Suppose next medium size candle is there. Base candle. Next base candle is there. Then can we keep all in the base? No. At the time this will be a leg in. Next base candle is the base candle. Next leg out candle. Because you don't have any base candles, you kept the medium size candles in the base. That means this zone is having a strong order flow. I ignored this candle. Sorry. It's my mistake. I just looked into all these base candles. I thought there is no zone, but actually there is a base. So this is the beauty of our software. While analyzing, I just ignored this. But the advantage with this supply demand zone chain, it spotted the zone. Immediately, the moment we looked, the one I did not recognize with my eyes because of my ignorance, maybe I'm just a little bit rush. So fully I didn't concentrate all the candles, so I ignored. So same mistake I would have done when I am doing the analysis in the for my trading point of view. That way I might have missed this trade opportunity in this zone. But actually here we have a zone. But it is not a high liquidity zone. This is a normal demand zone. This daily demand zone is inside the weekly low priority high liquidity demand zone. And apart from that, what is the next? Next we have another high liquidity demand zone. When this is a 28 to 25 2 base candles. This is the one, 28 to 2 base candles and a rally. This is a medium size leg, part of the base. Or maybe this is a tiny candle compared to the other candle. Tiny candle by default is a base candle. So anyway, this is a drop, 2 base candles and a rally candle. Drop, base, rally. And what kind of zone it is? This is a high priority, high liquidity zone. And in this zone, daily trend is changed. So this is a daily HLQ demand zone. Sorry, daily high liquidity demand zone. Daily high liquidity demand zone. See here, the advantage is more order flows are getting created. Do you know where this daily high liquidity demand zone is created? Inside the pierced zone. See, the weekly pierced zone. These order flows will be much stronger. Okay, below that, any other demand zone? What is the next one? We have a pierced demand zone is there. This pierced demand zone might have been overlapped with that pierced weekly zone. So let's draw that. 12 to 2024, one base candle here. This is the one, 12 to 2024, one base candle, rally candle. Let me draw this zone. This is the daily pierced demand zone. See, this daily pierced demand zone is the origin for this weekly pierced demand zone. Both are pierced on the elections day, elections declaration day, that is 4th June. That day we have seen huge volatility in the market. But finally price is closed inside the weekly zone. Just only zone is pierced. But any new order flows, while prices are moving up, those order flows are very, very strong. So this is the area we have to see. This is the area at present daily time frame, we don't have any order flows here. But maybe 75 minutes order flows might be there, that we will see later. Okay, this is about daily time frame. This is good enough. We have drawn the daily zones. And this daily zone, we didn't add any text. This is a normal demand zone, but still let me draw. This is a daily demand zone. See, this daily demand zone is having monthly EMA confluence. Of course, this daily zone is part of the weekly demand zone. So this daily demand zone is the fine-tuned demand zone. You may say it is not a high priority. Why you are focusing? You may say the reason is this is a fine-tuned zone. Fine-tuned zones are powerful. You already learned in lesson 16. Daily, what is fine-tuned zone? Daily zone is inside weekly zone, both together inside monthly zone. Such kind of zones we call fine-tuned zones. Of course, this is having until 5 minutes order flows are there inside. This is super powerful zone. But at this point of time, they are powerful because this zone is having not only a fine-tuned zone, it is also having monthly EMA confluence. Monthly EMA confluence is much stronger compared to the weekly EMA. Compared to the weekly EMA, daily EMA is, compared to next daily EMA, compared to the daily EMA, weekly is much powerful. Of course, daily is also powerful, no doubt in that. But based on the time frames we are trying to understand. Okay, now daily is also completed. Next we will go to 75 minutes. But you have also having flexibility to focus on even 125 minutes also. Any high liquidity zones 125 minutes, let us draw them. Or otherwise you can directly go to 75 minutes. But when opportunities are there, why we should lose? So that's why I am focusing even 125. Now I want to draw only high liquidity zones. First of all, what is the nearest demand zone here? This is the one. This is the nearest supply zone. But my focus is only on the high liquidity zones. So the nearest high liquidity zone is 14th. That is 18.3, 13.25. So I am changing the time frame to 125. 18.3. Here, 18.3. This is the 13.25. This is the rally. You have 3 base candles and a rally candle. That means same zone is also daily as well as 125. So no need to draw again. The same zone. Let me add the text. This is also the same thing is both daily as well as 125. What happened? Okay. This is the immediately available 125 minutes. Of course, below also we have one more. This is 17.3, 9.15, 2 base candles. Somewhere here. Yeah, here. 17.3, 9.15. See, the earlier daily was not clear, right? But here this we have clarity. 17.915, 2 base candles with hidden body rally candle. So this is the way you can draw the daily, this 125 minute zone. So let me mark this as a but did you notice? This is almost having monthly EMA confluency. The monthly EMA line just overlapped with this. So this is the area we have strong institutional order flow. Okay, below that any more high liquidity zones below this? This is the 4th March 9.15, 2 base candles. This is the one, yes. 4th March 9.15, 2 base candles, right? Yeah. 5th March 9.15 is the leg out. So this is also 125 minutes high liquidity zone. The advantage is, if high liquidity zone is overlapped with another high liquidity zone, another time frame high liquidity zone, then that indicates order flows are much, much stronger in that zone. That's why we are making use of this. But here in this place, any 125 minute zone is created. We have failed ERC, we have base, but no, like out, I think in 4th zone, we don't have. Next one is 15th May, below that. 15th May means below this. Somewhere here, anyway, that is violated zones. They are violated or pierced zones. This is a pierced zone. Okay, let's focus on 75 minutes. But before that, any supply zones here? That also focus. We focused on demand zones. Supply zones. (10 to 11:20). This is a 10 to. This is the one drop candle. These 2 base candles and drop. 2 base candles and 11 to 11:20. This is 11 to 11:20. So here we have let me give the same daily color only. (125 min) high liquidity supply zone. Of course, above also we might be having, but we will see that also. This is a low priority high liquidity supply zone. 75 minutes we will focus low priority. Here the next one is 18:10, 11:20. 18:10. 1810. So here. So rally base drop. So this is the supply zone. But we made a mistake. We didn't draw high liquidity, daily high liquidity zone inside this. We just limited to this. Let me finish that work also. I'm going back and see 125 is completed. Before moving to 75 minutes, let me go back to daily time frame. Daily time frame supply zones. This is the one we have drawn. There are few more are there. Changing the time frame to daily. This daily zone I have drawn and I shifted to, I didn't miss the earlier demand zones. So what are the other demand zones here? Daily demand zones, high liquidity, especially high liquidity. 1712 normal demand zone. When is the 1712? 1712 gap down. This is a normal daily demand zone. But it is already tested. But LOTL, not LOTL, rally, again it's a medium sized drop candle. No base candles here. It is just a pivot only. So this is a daily supply zone. Normal daily supply zone. Okay. So this is a 1712. Next one, there is one more supply zone. This is 1312. Where is 1312? This is the one. 1312. Rally base drop. But actually, this is the. Here we have 75. Just above that. This is a normal zone. Above that, you see 125, Maybe this 125-minute zone may act as a trap to this daily supply zone. If daily supply zone violate, the one above trap will be there. 125 high liquidity zone. See, because we are drawing all these zones, see how we are identifying the traps. This is there just above. Maybe it could be a trap. Okay, here we need to identify a zone, daily zone. That is important because this is a weekly high liquidity zone. We should have a fine-tuned zone. That's why a daily zone. Probably this is the one. This is 15, 10, 24. This is also high liquidity zone. 15, 10. See this? This is the 15, 10. One base candle and drop. Drop, base, drop. And this 125 is fine-tuned with this daily zone. So this is a daily high liquidity supply zone. See, lot of patience is required to mark all these zones. Once you draw, this analysis will be valid for at least for the next few weeks, 1 or 2 weeks. Any zones in between violate, you remove from your charts, and in newly created zones in the next supply demand zone chain reports, you will be drawing on your charts. But first time when you are drawing all these analysis, definitely you have to spend some good amount of time. After that, reusing the existing already drawn zones only. Every day by seeing supply demand zone chain, slightly you make changes on your charts. Okay. This is the one. Anything else before that? You have a supply zone on 39.24. This is the one, yes, 39.24. This is a normal demand zone. Again, rally based drop. This is the high liquidity demand zone. Okay, we will focus on these zones once this weekly zone is violated. If weekly zone is violated, monthly zone also will be violated. Did you observe? This weekly zone is the lower time frame zone to the monthly zone. That is what we already discussed. This is overlapped at the distal line of the monthly zone. This is the monthly zone. Monthly zone distal line is here. At that line, this is overlapped. So, lot of supply is there. At the same time, lot of demand is also there. See, by seeing all these markings, you understand how strong the demand here and how strong the supply here. That way, you will get a clear picture in your mind by the time you complete the analysis. Where you should plan long trades, where you should plan short trades. That clarity you will get in your mind by doing this supply demand zone chain analysis. That is the beauty of our supply demand zone chain reports. Okay, now you have completed a daily time frame and also completed 125. Now let's move on to the 75 minutes time frame. This is very important for swing traders, especially weekly income trade traders. 75 minutes plays the critical. Okay, now we are in the 75 and let us draw the supply demand zone chain for 75 minutes time frame. Generating 75 minutes supply demand zone chain for Nifty. Okay, 75 minutes chain is ready. Now what is the nearest demand zone? 13th is the nearest demand zone. 12th is the nearest supply zone. So let's focus on the demand zone first and then we move on to supply zone because an interesting observation you will be seeing. Okay. What is the immediately available? 13th. That itself is a high liquidity demand zone. When it is created, 13 hours. One base candle. Where is 13 hours? This is the one. Rally, base, rally. This is a 75 minutes high liquidity demand zone. But is it a fine-tuned zone? No, it is not a fine-tuned zone. Just a high liquidity zone. So 125, 75 minutes demand zone color. So this is a 75 minutes high liquidity demand zone. Suppose if it is having any fine-tuned 5 minutes, inside 15, 5 minutes, even normal demand zones also okay. But this high liquidity is having a fine-tuned 5 minute zone. Probably that fine-tuned 5 minute zone might be having a higher success rate. At least intraday, we will get a good trade opportunity. Okay, after that, next one is also high liquidity zone. When it is created on 23, 19, 15, after that 2 base candles. So this is a 23, 19, 15. See at the hidden body, this is a rally candle. You have a base candle. You have a medium size candle. So included both part of the base and rally candle. Maybe this candle is not good enough to identify the imbalance is started from this candle. Maybe as a human, we can consider this as an imbalance started. We can draw a zone base here. But software did not consider. That is the beauty. The reason is software parameters are not satisfied to consider the imbalance is started from here. That's why 2 base candles it has given. Next 23, 13 hours. This is a large candle. So that way these 2 are part of the base. This is also 75 minutes high liquidity demand zone. But we should have fine-tuned 5-minute zones inside. That we will see in the next time frame when we analyze. Okay, what is the next one? These two demand zones are completed. The next demand zone is a normal demand zone, but still we respect up to 75-minute zones, because if it is any fine-tuned zone, we can draw. If it is not a fine-tuned zone, if it is an aggressive trade setup, we will leave from our charts for time being. So 18, 3, 14, 15, 5 base candles. 18, 3. So 5 base candles. So rally candle. Maybe this is not a failed ERC according to software point of view. Why failed ERC? Because maybe it is a little shorter than it's considered. So it considered base candle. Why it is not considered as a leg candle? Maybe this software considered this as a tinny candle, small candles. Small candles by default, whether they are fully filled or they are not filled, partially filled, it doesn't, the body. Even if 100% body also, tinny candles or small candles are by default a base candle. Maybe software consider all these are all small candles. This is the medium size candle. And this is also medium size. But this medium size is qualified as a leg candle. This medium size candle is qualified as a base candle. So that's why 1, 2, 3, 4, 5 base candles, one rally, and here this is the hidden body, a rally candle. People feel this is a base candle, but you land hidden bodies. That's why this is a rally candle in the dynamic view. So you need not draw, I need not draw the zone again here, because the entire thing is a daily zone and also 125-minute zone, and this is also a 75-minute zone. This is a 75 minutes normal demand zone, not HLQ demand zone. But 125 minutes is HLQ demand zone. Okay, this entire zone. Okay, next, what is the next demand zone? 75. This is 18.3, 9.15. Where is 18.3? This is the one. Rally, 18.3. 3 base candles and rally. 14, 15. 18.3, 14, 15. 18.3, 14, 15. Okay, this is a medium size candle. How it's selected as a base leg out candle? This is the doubt you should get, right? Here, that is what the beauty of the software. The imbalance where it is started, it will identify. So, for the software algorithm calculations, this candle satisfied that the imbalance. See, earlier prices moved in a narrow range. From there, imbalance started. After that, follow through candle, but base candle, that one. But somewhat it is maybe it is a highest medium size candle, because medium size candle, some range will be there, right? Probably this is the highest one. Otherwise, it would have been considered as a failed ERC, as a leg in this base candle. Software would have considered. But anyway, if you ask me manually how you draw the zone, here I draw rally, 2 base candles and rally I draw. But software, it adheres to its limits, whatever the limits we define. So it has to. So this is a normal demand zone. 75 minutes demand zone, not high liquidity. But why I am drawing, suppose any fine-tuned zones or any 5 minutes high liquidity zones inside, at the time these zones gets the importance. That's why I am drawing all these zones, even though normal. Until 75 minutes, you draw all the zones, even if it is normal or high liquidity. Just add the text so that you understand which is high liquidity, which is normal. Because these zones plays important role, because inside this, if any 5 minutes high liquidity zone is there, then this zones gets the automatically importance. Because that 5 minute zone, high liquidity zone, makes the magic. Okay, what is the next one after this? We have a high liquidity demand zone, next 75 minute zone. When it was created, 17th March, 13 hours, 1 base candle. This is the one. 17th March. Sorry. This is a 125 minutes high liquidity demand zone. This 125 minutes is inside a daily zone. So this one plays the role, important. This is a 75 minutes high liquidity demand zone. This is overlapped with 125. 125, 75 overlapped with daily zone. And daily is overlapped with weekly zone. This weekly zone is having monthly EMA confluence. Of course, it is also overlapped with monthly also, because monthly zone is here up to here. Okay. Fine. What is the next one? Why I'm looking for the next, there is a reason I want to tell you. Next demand zone is on 13-3, 10-30, 3 base candles. Where is 13-3? This is 12-3, this is 13-3. This is also 12, sorry. This is a 13-3, 10-30, is it 10-30? Yes, 10-30, 3 base candles. 1, 2, 3 base candles and a rally candle. See here? This is also inside the daily zone. And also this is at the distal line of the 125 minutes high liquidity demand zone. So inside the daily demand zone, we have 2 fine-tuned 75 minutes demand zones. This is the first fine-tuned 75 minutes demand zone, high liquidity zone, and this is the second fine-tuned 75 minutes normal demand zone. Anyway, normal demand zone also having a lot of importance in case if this 75 is having fine-tuned 5 minutes zone. So that's why these 2 order flows are important. 75 minutes demand zone. This is a normal demand zone, right? Yes. So this 75 minutes, this daily demand zone is having a 2 fine-tuned 75 minutes demand zone. Both are inside the weekly low priority high liquidity demand zone. But that weekly low priority is having monthly EMA confluence, which is inside the monthly demand zone. Weekly is inside monthly. All are fine-tuned. That's why these are the order flows, actual institutional order flows. But how strong these order flows? They're all based on the zones are having fine-tuned 5 minute zones or not. If fine-tuned 5 minutes, these order flows are strong. We can plan them for our trading point of view. Otherwise, we have doubtful about these order flows, we ignore them. Okay, this is the normal demand zone. The next we have, what is the next demand zone? Next one is 12-3, 10-30. 1 base candle. Where is 12-3? Here. This is also inside the daily. That means daily is having 3 order flows. 12-3, 10-30, 1 base candle rally. So that means this low priority daily liquidity zone having full of order flows. So many order flows institutions kept here. See, all these 3 75 minutes are LOTL 75 minute zones. If all the 3 are having fine-tuned 5 minute zones, then we can trust those 75 minutes demand zones. See, drop base rally, drop 3 base candles rally, rally base rally. We have all the 3 demand zones. Among these 3, one is high liquidity. The first one is high liquidity demand zone. Okay. So this is the next one. And what about the next? This is the one. This is a 4-6 2024 13 hours. Actually 4/6 2024. This is 12/3/25. Now all of a sudden 4/6/2024 13 hours. This is the one actually I'm looking for, maybe. Let me check. This is having two base candles. 4/6 means, you know what? 4/6 is our elections declaration date. On the day, it looks like these weekly and daily zones are pierced zones, right? But when it is pierced, again prices are moving up. At the time, institutions created a new zone. This is 4/6 13 hours. See, 4/6 13 hours. After that, two base candles. These two are base candles. Next one at 5/6 10:30 leg out candle. 5/6 10:30 we have a leg out. I was waiting for this zone. Let me draw this zone. This is a normal zone only. 75-minute zone. But still, why I am giving importance to this one? The reason is it is inside a pierced zone. It is a newly created order flow inside the pierced zone. The newly created order flows inside the pierced zones are much stronger order flows. This is what you learn in pierced zone strategies. Pierced zone strategies, you learn three strategies. One is about finding lower time frame horizons. Second one is finding the bull or bear traps. And third one is finding the newly created order flows after the zone is pierced. See, the zone is pierced. After the zone is pierced, a new order flow is created inside this pierced zone. From this, prices moved up. Because the order flow is very strong, see what happened in the recent time. See, from this 75 minutes demand zone, prices reached and then this entire move started. See, all these days, Nifty is falling down. Here some move is there. And now again, falling. See the fall. Everybody panic at this point of time. If you look into the newspapers between 5th February and 3rd March, please go through the newspapers or maybe television videos. YouTube, you might be having recorded videos, right? Please go through the videos. How everybody will be telling, sell. Market is falling, you sell. Market is crashing. Trump is doing some decisions or some other decisions. Or maybe something is happening in around in Asian countries or European countries. These kind of nonsense you will be seeing. But for us, they doesn't make sense. But what makes sense? This newly created 75 minutes demand zone, that makes sense for us. Because as per the pierced zone strategy, this zone is having strong order flows. Now have you seen? What is the Nifty value when it reached into this zone? Near the low. Here probably fine-tuned zone will be there. But before that here, what is the value? 21,990, say, let us say 22,000, approximately 22,000. Okay, now here, because now it reached this 125 minutes fine-tuned zone, inside probably 75 minute zone might be there, but before that up to here, what is the value? 23,400. The high of the candle is 23,400, to say 23,400 minus here, what is that value? 22,000. How many points move Nifty gave you? 1,400 points. Who is the responsible for giving this 1400 points move? The pierced zone strategy inside the weekly pierced zone. Of course, that is also overlapped with the daily zone. From this daily and weekly overlapped exactly at that intersection, this 75-minute zone is created. See, the 75-minute zone, from this daily zone and weekly zone overlap area, it is started, and this entire zone is formed, and a strong institutional order flows are available here. That is what you learn in pierced zone strategy in lesson 28. Please listen once again, in case if you forget the concepts. So I told you, the newly created zones might be having a strong institutional order flows. It doesn't matter whether it is a high liquidity zone or a normal zone. Those zones in general have strong order flows. See, the strong order flow area prices started moving up, moving up, moving up. Here some supply, it got some resistance here. Finally that is broken. Until this weekly supply zone, the overlapped area prices moved. Inside a daily, again here you have a 125 high liquidity zone overlap area. Till then, how many days it took? This is on 4th March, and this is on 21st March. In 3 weeks. In 3 weeks, see what happened. 1400 points move it has given. Now you tell all the newspapers, everybody, they were shouting like sell, 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 market is crashing. What happened to all those newses? Now they were a bit calm. For the last 1 week I am not seeing any shoutings. Again they will start screaming. Once again market is started falling. That's why, as a demand and supply zone trader, with the help of the supply demand zone chain, when you start analyzing the charts, with all the strategies you learn in your course, you combine everything as a package. If you start analyzing, then you will understand the reality. Got it? Okay. So recently again 4/3/2025, 9:15, 4 base candles, low priority zone is created here. 4/3 within the same 75-minute zone, LOTL zone. This rally base rally is LOTL. See, already this is LOTL zone. 75. Within the 75 again LOTL zone is created, indicating new order flows again added in this zone. Maybe any reason prices came here once again. These new order flows, again they push the market up. And moreover, the moment it changed, why it is a TCO zone? See, this is a TCO at 75. The reason is, now it started changing the trend. Once a trend changes takes place, we get the TCO status, trend change origin. Why only from here the trend is changed? Because this is a new order flow inside the pierced zone. Those order flows are very strong, and they make sure the existing downfall in 75 minutes time frame is changed to sideways. Later again 75 is changed to uptrend. Maybe that is the reason why the current 75 minutes trend is showing uptrend. But actual trend changes took place from this area. That is new order flows inside the pierced zone. So that's why we have drawn this daily and weekly pierced zones in our strategy. Now actually market is already completed, and we have drawn these zones before prices reached this zone. If you look into 14th January 2025 video in our YouTube channel, 14th January 2025 video, there is a video about monthly demand zone analysis video. This is the demand zone. 14th January, where is the prices? Here. So the prices are here, 14th January. On this day, price did not reach this zone. But on this day, we did this analysis. If you look into 14th January, you will see all these zones. In the 14th January monthly analysis video, you will see all these zones. After that, prices reached here, after our analysis. Exactly what we drawn. From this area, prices started moving up. That means we did our analysis perfect way. Probably you can say, okay, this is a lesson 29.5. I agree with that. But strictly speaking, this lesson 29.5 is also like a revision lesson to what the video analysis, monthly analysis video I did in 14th January 2025. If you have time, go to our YouTube channel, search for 14th January 2025 video, the monthly analysis video. See what we discussed. Exactly same thing happened or not, now you can find. And who would have got maximum benefit from that video? Swing traders. Of course, intraday traders, same day they would have closed their trades. But swing traders would have got the maximum benefit. Until this weekly supply zone, 1400 points move it has given. Can you imagine what could be the profit? It's a huge profit in just 3 weeks. Okay. So this is about demand zone, 75. What about supply zones? Now let's do the analysis on the supply zone side. So where is the supply zone? Nearest supply zone here, this is the one, 12th. So what is the 12th supply zone? This is a normal supply zone, 75, but we have to draw on the zone. This is on 10 to 9:15, 4 base candles. This is 11 to. This is the 10 to, yeah. 10 to 9:15, 1, 2, 3, 4 base candles and then a drop candle. So this is a 75-minute zone which is overlapped inside the daily zone and also overlapped at the 125-minute zone. So this is a fine-tuned zone inside the daily zone and also fine-tuned zone inside 125-minute zone. So this is a 75 minutes supply zone. The zone high, this is the zone high, not this candle. So exactly at the digital line of 125 minutes. So this 75 is inside 125 minutes. HLQ supply. 125 is a high liquidity. That way you can understand 75 is also inside the high liquidity area. Of course, daily is also high liquidity. Okay, after that, what is the next one? The above. This is the TCZ and it is a pierced supply zone. And a daily 75 minutes time frame onwards, we are leaving pierced zones. Daily and above is more effective. 75 also you can consider if it is a high liquidity zone. But let's focus only pierced zones, daily above only. So here we have a high liquidity zone, 75 minutes. When it was created, 2nd January, 13 hours, 1 base candle. 2nd January. Second January. Here, 2nd January. Is it 13 hours? Yes. Rally base drop. Here a high liquidity zone is created. This is 75 minutes high liquidity supply zone. So this is the weekly. Next 18th 12, 4 base candles. This is 17. 18, 12, 9, 15, 4 base candles. Next 19, 12. So this is the one. See this one, this is also 75, this is also 75, but the thing is, this 75-minute supply zone is a fine-tuned supply zone. So LOTL zones are created. Within this 75, the high liquidity LOTL zone is created. Good, interesting. So this entire 75. Okay. Next one, 16, 12, 9, 15. This is the one, 16, 12, 9, 15. So inside this daily supply zone, we have a fine-tuned supply zone. So this is also 75 minutes supply zone, but not a high liquidity, but it is a fine-tuned zone. Fine-tuned zones are always powerful. Next one is again another supply zone, 15, 10, 9, 15, 5 base candles. So this is within the second high liquidity zone, but we are in the monthly zone, right? So that's why we are drawing. If monthly zone is completed, then we can focus on the other things. First of all, when is it? 15, 10. Where is 15, 10? This is the one. 15, 10, 1, 2, 3 base candles, right? 5 base candles. Something wrong. Yeah, 15, 10, 9, 15. 15, 10, 9, 15. 16, 10, 10, 30 is the leg out. This is the leg out. So this is the one. Okay. So this is also a fine-tuned zone at the distal line. Inside this daily high liquidity zone at the distal line, this is a fine-tuned zone. At the proximal line, we have 75 minutes high liquidity supply zone. See here, daily is not identified. 75 is not identified. 125 is identified here. This is 125 minutes high liquidity supply zone. So if 75 is missed, 125 is captured. That's why we looked into both 75 and 125 minutes. Okay, after that, this is good enough. And any one more 75? Yeah, one more, probably we will see this also. This is 14, 10, 9, 15. Somewhere here or even before that. This is 14, 10, 9, 15. This is LOTL zone, I think. See here, LOTL zone. This is inside weekly. This is 75 minutes supply zone. Okay, and this zone is a lower time frame horizon to the daily zone. See, this is the daily zone. The actual daily order flows are picked up from this 75-minute supply zone. So that way the 75-minute supply zone is important. See how the order flows institutions are created. If you look into this, then you will understand. Okay, this is about 75. Next time frame, 25 minutes. 25 we will look into only high liquidity zones. We don't focus on the others. And in the 25 minutes, what is the nearest demand zone? 19th is the nearest demand zone. Nearest supply zone 18th, but not a high liquidity. 14th is the high liquidity supply zone. So let's focus only high liquidity zones. And these zones, you need not do the whole analysis. You do because of 25 minutes onwards only for short-term opportunities. Once these zones are violated, then you can focus on the other. You can focus only on the few zones. Short-term trading or daily intraday trading, you can use these 25 minutes, 15 minutes and 5 minutes high liquidity zones. So 19, we have 21.3, 9.15, 2 base candles. So I'm changing the time frame to 25 minutes. (21.3, 9.15). This is the one. 2 base candles. Next one medium size, and this is the leg out. Origin is started from here, but software point of view, calculation still origin is not considered this one. But manually we can say rally base, rally, medium size. This is the rally. But actual origin is started. See, just above that, prices again started moving. This is 25 minutes. This is a 25 minutes high liquidity demand zone. Of course, you should again look into fine-tuned 5-minute zone. But let me respect our software. Software considered both the candles. Inside, if you go to 5 minutes, a fine-tuned zone will be there. Probably from there, prices are moving up. Rally, 2 base candles and rally. And what is the next one? Below we have 20 high liquidity zone. This is a 23, 10.55, 3 base candles. (23, 10.55) rally, 1, 2, 3 base candles and rally follow through candles. So inside 75 minutes, we have this 25 minutes high liquidity zone. Probably 15 minutes also might be the same, but that we will see in 15 minutes. Or if 15 minutes misses this zone as a high liquidity, we are lucky because we confirmed this as a high liquidity zone. The 25 minutes high liquidity demand zone. What is the next one? Below you have one more high liquidity demand zone. This is 19.3, 14.15, 2 base candles. 19.3, 14.15. This is the one. Rally, 2 base candles and a rally with hidden body. So this is also 25 minutes high liquidity demand zone. Okay, below that we have a normal demand zone and again high liquidity demand zone 23. This is 18.3, 12.10. 18.3, 12.10. 1 base candle, right? Yeah, 1 base candle. This is the one. So this is also 25 minutes high liquidity demand zone. Okay. Next, below that, 24th also high liquidity zone. When it is 17.3, 13.50, 3 base candles. 17.3, 13.50. This is the one. Yeah, these 3 base candles. So inside this 75 minutes high liquidity zone, we have again a 15 minutes high liquidity, the same thing. So that means 75 and 15 minutes are same. So no need to draw the zone. I can add the text. The same size 25 minute zone also. Okay, after that We have demand zone again, high liquidity, but it is a pierced zone. So we don't consider pierced zones from below time frames. Here high liquidity zone, 28. Here trend changes are taken place. Here 5, 6, 9, 15. 5, 6, 9, 15. 3 base candles. Five, 6, 2024. 5, 6, 2024 means probably here. This is the area. Five, 6. Is it 1915? Yeah, 915, 3 base candles, 5, 6, 1055. This is 1055. So drop 3 base candles rally. That means almost same, maybe a little extra, almost same. So I don't want to draw the zone. Same thing we can also say. This is the same 75. See, 75 is a normal zone, but see, 25 is a high liquidity zone. That is the beauty. That's why even if 75 normal zone, why I am drawing, did you understand now? See, now 25 minutes confirmed it is a high liquidity zone. And this is the area of only newly created order flow inside the pierced zone. And that order flow only gave us a good profit. Next one is 13/12/2023. So let's stop here. So this is about the demand zones we have drawn. Similarly, supply zones also we have to draw 25 minutes time frame. So where are the supply zones? Here we have, this is a supply zone, and here we have high liquidity supply zone 14th. This is a 5 to 1440, 1 base candle. 5 to 5th February. This is 7th. 5 to 1440. This is the one. See, this is the origin for this entire daily zone. See, this is the origin is 25 minutes supply zone. See, because this is the origin, we focus on this origin. In case if this daily high liquidity supply zone is violated, probably this origin strong institutional order flow might be there. But it should have a fine-tuned 5-minute zone. Otherwise, this will be violated. Okay, next above that, we have again another high liquidity supply zone, 25 minutes. When it is, this is a 2-1, 14-15, 2 base candles. 2-1, 14-15. The same thing. 2-1, 14-15, 2 base candles. That means same zone. Maybe somewhat it will reduce, but I do one thing. The same thing I will keep for 25 also. Anyway, our focus should be on the fine-tuned 5-minute zone. And next one, high liquidity supply zone. This is the one, 9th. 9th, 22-10, 9-15. 1 base candle. 22-10. This is 16-10. 22, 21. Yeah, this is the one. This is, see here, you add the hidden body, it is a rally candle, base drop. 10.5 is the one base candle, 10.5. So, this is the high liquidity zone. This is 25. This is inside. That means it is a fine-tuned zone inside the 125 minutes time frame. This is 25 minutes high liquidity supply zone. And before that, again we have 16, 10, 9, 15, 3 base candles. 16, 10. This is the 915, 1, 2, 3 base candles. This is the drop and follow through candles. So, anyway, this is inside the daily high liquidity zone. $10.55 candle, right? $10.55. This is a 25 minutes high liquidity supply zone. And above that we have, this is a 27.9, 13.50, 27.9. September. So this is above this weekly zone and monthly zone. So we will leave that. Later on you can draw those zones once these zones are violated. This itself is good enough. So with this we have completed 25 minutes drawings. Next, go to 15 minutes time frame. So I'm changing the time frame to 15 minutes and generating 15 minutes supply demand zone chain. So 15 minutes supply demand zone chain. What is the nearest demand zone? 30 is the nearest demand zone. And 15 minutes and 5 minutes mostly you use it for intraday or short term trading. So that's why what I do, I limit that analysis to only small part, not the entire zone. Once they are violated in the latest reports, I will look into the next reports and I can draw. Maybe you can complete the remaining what I did not draw in this video, you can complete in your charts. Maybe you can feel that is an exercise. Okay, here also high liquidity zones we focus. And any fine-tuned zones also. Fine-tuned zones you please draw on the charts. Maybe I may not be drawing fine-tuned zones inside 75 minutes or inside daily zones. So you please draw the fine-tuned zones. I am focusing only HLQ zones. Fine-tuned zones also very important. Then only your complete analysis will be changed. Because you already learned, I am giving that work for you as a homework. You can feel like that. Okay, 31. 23, 11 o'clock. Where is that? 23:11. This is 23:11. We have a rally. 6 base candles and 12:45 is the leg out. This is a high liquidity zone. So this is the rally 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6 and this is the rally imbalance started from here and again rally candle. That's why see the where imbalance started, that is actually catched by our software. So 1, 2, 3, 4, 5 and rally. So this is same as even 15 minutes zone. 75 almost same. See here rally 1, 2, 3, 4, 5, 6, a little extra is coming, that is fine. So that means the entire 75 minute zone, 25 minute zone and 15 minute zones are also same. So what I'm going to do, I'm going to add 15 min HLQ demand zone, the text I'm adding. Okay, that means 25 and 15 are almost same. What is the next high liquidity demand zone? See, you have other demand zones below, right? Maybe some of these demand zones are fine-tuned demand zones in 75 minutes HLQ zones or some other zones. So that's why you please draw them on your charts, because fine-tuned zones are very powerful. If 15 minutes, inside 15 minutes, 5 minutes fine-tuned, that means that zone is having a very high successful rate. Maybe I'm focusing only HLQ zones, but you have to complete the rest of the work. So here 19.315. 19.315, where is it? This is 18. 19.315 hours. This is the one. $19,315. This is a drop candle. One base candle, 23,915. Something wrong here. Leg out with gap. 19,315, one base candle, 23,915. This is 945. Nineteen 23,915. Where is 23,915? Yes. Sorry, I'm all of a sudden I was looking into wrong date. Okay, that is what I'm wondering. Where is the zone? I'm not seeing any zone here. How software is working in a wrong way? I'm blaming the software instead of blaming myself. Okay, this is the drop, this is the base, this is the rally. This is 19, 15 candle, base candle, and 20 rally candle. So this is the 15 minutes demand zone. Okay, fine. This is inside 25 minutes zone. And both are inside daily and 25, 75 minutes demand zone. So this is a fine-tuned zone, 15 minute zone inside daily zone. That way you can understand. Okay, where is the next demand zone? Focusing only on high liquidity zones. The next one is 4-6 2024 12-20. 4-6 means on our results declaration day. 4-6 12-30, 4 base candles. So this is the area. No. 4-6 12-30. This is the one. 4-6 12, 4 base candles and 13.45. Where is 13.45? This is the one. So that means this entire zone, 15 minute zone. So almost 15 minutes demand zone is overlapped with 75 almost, but at little below distal line it overlapped. Next one is 5-6-24. 5, 6, 24, 10, 15. This is the one, drop, base, rally. So let me focus on this rather than the whole thing. Anyway, 25-minute zone is there. So this is the one. This is a 15-min high liquidity demand zone. Five, 6, one base candle. 5, 6, 10.45 leg out. This is the one, 10.45. Drop, base, rally. So exactly from this 15 minutes, see, price reached, almost touched the digital line of this 15-minute zone, and then this entire rally movie started. This 15 minutes high liquidity zone is responsible for this entire 1400 points move in Nifty. Okay, after that 25-1 we will leave this. Now let's focus on the supply zones. 15 minutes high liquidity supply zones. When we have 24th, we have a supply zone, high liquidity supply zone. This is 3rd January 2025, 11:15. 3rd January, 11:15. Where is 3rd January? Here. This is the area. 3rd January. This is 2nd January. This is 3rd January, 11:15. That means below this zone, 3 base candles and a drop candle, rally base drop. Let's check. 3 base candles at 12:45 is the drop. Is it rally base rally? Rally base drop? Yes, rally base drop. This is a 15 minutes high liquidity supply zone. And this 15 minutes high liquidity supply zone at the proximal line of the 75 minutes HLQ supply zone. Above that you have one more supply zone. What is that? 2-1-15. 2nd January. This is the one, 2nd January. What time? 15 hours. So this is the 15 hours. How many base candles? 2 base candles and 3rd January 1930. Okay, actually imbalance started from this candle. You can draw within this. Drop, base, drop. This is a fine-tuned zone. See, these fine-tuned zones inside the high liquidity zones, you have to draw. Because I am not drawing. Because why they are important? Because fine-tuned 5-minute zones are the actual institutional order flows. So you please complete that work. At present, I am focusing only on the HLQ zones. And you have one more HLQ zone on 17th 12. 17th 12 means maybe at the top of these zones. So let me limit my analysis to up to here, this level. You have 17th 12 somewhere here, probably zone. Let me finish that. With that, I will close the 15 minutes time frame. 17th 12, 9:45. Where is 17th 12, 9:45? So here, 17th 12, 9:45. So this is a 15 minutes high liquidity supply zone. See, this is what you should understand. This is the 15th high liquidity supply zone. Okay, now let's go to the 5 minutes time frame. Generating 5 minutes high liquidity zones, supply demand zone chain. So this is a 5 minute supply demand zone chain. The nearest demand zone is 47. This is the nearest demand zone. When it is created on 21st March 10, 21st March 10. So where is 21st March? See, this is inside, fine-tuned zone inside this 25 minutes high liquidity zone. 21st March 10, this is also a high liquidity zone. 10:25. We have leg out. Let me draw this 5 minute zone. So this is a 5 minutes high liquidity supply zone. Sorry, demand zone. 5 minutes high liquidity demand zone. So these are the areas we will be planning our trades. Why I am drawing is intraday traders will be planning on these 5 minutes high liquidity zones. If they are fine-tuned zones, the success rate will be even more compared to the other fine-tuned 5 minute zones or other 5 minutes high liquidity zones. Okay, the next 5 minutes high liquidity zone is 23:10:5, one base candle. 23:10:5. This is the one. See, this is not a fine-tuned zone. Maybe this might be acting as a trap. Okay. See, here we have a 75 minute zone. If 75 minute zone is violated, maybe this may act as a trap. But this is having any fine-tuned 5 minute zone, you have to draw. If there is any fine-tuned 5 minute zone, this zone we can plan a trade. Otherwise, it will be violated. Probably from here it will pick up the orders. That way you should understand. You check if there is any fine-tuned 5 minute zone within this area. Okay, next high liquidity zone 51. When it is created 19:3:10:45, one base candle. 19:3:10:45. Here, this is the zone. See, here you have a drop base rally. Let us draw this zone. See, this 5 minute zone is also below this 25 minutes high liquidity zone. See, it is having a fine-tuned 15 minute zone. Now the fine-tuned 15 minutes you have, fine-tuned 5 minute zone is also there. You see, drop, 2 base candles and rally. You can draw a zone, a 5 minutes fine-tuned zone here, like this. If this is violated, below you have this high liquidity zone. Might be acting as a trap. Okay, what is the next high liquidity zone? Below again you have one more high liquidity zone. This is 19:3:9:45, 5 base candles. 19:3:9:45. This is the one, 19:3:9:45 rally. You have 1, 2, 3 base candles. These two are considered as a medium size candles, and that way they have drawn the zone. So this is also, but both are LOTL zones. Okay. And the next one, even below you have one more high liquidity zone. This is 18.3, 14.10, two base candles. 18.3, 14.10. Two base candles. So this is the one. This is the high liquidity zone. This is the aggressive trade setup, because inside a 75-minute zone, you have this 5 minutes zone can be aggressive trade setup. That is the way you should understand. Maybe if any 15-minute zone is there, you can draw 15 minutes. 15 minutes may not be high liquidity zone, because I am drawing only 15 minutes high liquidity zone. That's why there could be a 15 minutes you might have missed it. You have to complete that work. And what is the next high liquidity? 59. When it is 17.3, 13.25. 17.3, 13.25. So here we have 17.3, 13.25. This is the lagging. You have 5 base candles, 1, 2, 3, 4, 5. And rally. Probably software consider this also a base candle. Maybe manually we may draw base rally. But let us respect the software calculations. So that way I am drawing the zone. So this is a 5-min high liquidity demand zone. And this 5 minutes high liquidity demand zone is horizontal to this entire 75 minutes high liquidity demand zone. 75 minutes and also 25 minutes both. But if you hide this gap, see, this is looking like a drop. 3 base candles. This is a fine-tuned 5-minute zone. See, generally what you do, you plan your trade in this zone. If this is violated, then you will be planning your trade. Why we will be planning? Because this is inside 75 minutes. Inside 75, we have 25, the same area, and you have 5 minutes. Probably here some 15-minute zone also might be there. Let me go to 15 minutes time frame. See here, 15-minute zone is also there. You have a rally, 2 base candles, and a rally. This is how you will fine tune. Actually, I told you to do this exercise. Go to 5 minutes time frame. Now you see, where is it? 17th March here. This is 19th, this is 17th, yes. See, we have a 75 minutes high liquidity zone. Inside the 75 minutes high liquidity zone, we have a 15-minute zone. Inside the 15 minutes, we have a drop 3 base candles and a rally candle with hidden body. You get a rally, big. So this is the 5-minute zone. So in this fine-tuned 5-minute zone, intraday traders will be planning our trades. If this is violated, then prices will be coming here. So our software identified this as a rally, 1, 2, 3, 4, 5 base candles rally. According to software calculations, this is also best. But manually when we draw, definitely I consider like this only. Because software parameters are a little larger for 5-minute zones. Deliberately I gave large values parameters because software generated I want higher success rate. That's why I gave large. But manually we draw this as a drop base rally. This is okay. So this is the origin, lower time frame zone origin. But those who wants to use software related statistics, maybe you can draw zone like this. Nothing wrong. Because I developed the software, I know what kind of parameters I set for generating these zones. Especially 5 minutes and 15 minutes, I set high values because they are the lower time frame zones. The actual institutional order flows, I want them to be more accurate zones. Any lower time frame zone, sometimes there are higher chances to violate. That's why I increased the parameters, especially for these 2 time frames. So that's why sometimes you have the flexibility to modify. So that is the reason why instead of drawing like this, I am drawing like this. The advantage, risk will be reduced. Of course, the disadvantage, sometimes you will be missing the trade. But anyway, see, this candle picked up from this level only and then moved up. This is the lower time frame zone origin to the higher time frame, but that lower time frame zone origin itself is a high liquidity zone. See the beauty of these zone creation, how institutions first creating high liquidity zones, ensuring there is a strong order flow. Next, picking the orders from this area, the high liquidity zones, higher time frame zones are getting created and pushing the prices up. Because we identified the concept of lower time frame origins, we are able to trace how exactly institutions are playing. Actually, with that angle only, I analyzed the charts. During this process, I developed this concept. Lower time frame origin to the higher time frame zone. Sometimes software may not identify these lower time frames as a high liquidity because it doesn't get enough sufficient data to identify that as a high liquidity zone. But still, our concept, lesson 22 concept, lower time frame zone as an origin, whether it is a high liquidity zone or whether it is a normal zone, always we give same importance for both these zones. Okay, if it is already confirmed by our software, then no doubt we can strongly believe this is the high liquidity area. Next time when prices come, definitely we should not miss the trade. This is how you will be planning. Okay, what is the next one? 61. What is 61? 12, 3, 13 hours, 2 base candles. 12, 3, 25. So where is 12, 3, 25? This is 13, 3. Okay, 13, 12 even before. Here we have, what is that? 12, 3, 13 hours. This is the one. 12, 3, 13 hours, we have a rally candle, these 2 base candles and rally candle. This is again a 5 minutes high liquidity supply zone. See exactly from this 75 minutes demand zone, prices moved up and again get into this 5 minute zone, moved up. Once again it came to this 5 minute zone and moved up. and then the rally continued. Okay, before that, any other high liquidity zones we have? Let us check. 12.3 you have 12.30, but low priority high liquidity zone. Sometimes they also give you good results. 12.3, 12.40, yeah, this is the one. Five minutes, let me draw low priority HLQ zone. Drawing this text when you are drawing on your charts is very, very important, because later on you will get clarity what kind of zones they are. This is also inside 75 minutes high liquidity zone. Okay, what is the next one? This is a 6.3, 10.15. 6.3, 10.5, sorry, 6.3, 10.5, one base candle. Where is 6? This is 5, this is 6. 6.3, 10.5. 6.3, 10.5. This is the one. You see here you have a failed ERC candle. As a drop, maybe, so let us check how software considered. Is it a drop? Yes. Drop base rally. Because prices are nearing to the low, it's considered drop. The dynamic viewpoint of it is a drop, base rally. Let us draw this zone. You know the beauty of this zone? This zone is responsible for this entire weekly demand zone. See, weekly demand zone picked up the orders from this zone. And then they started moving up. So already once it is tested, first of all, this is a high liquidity zone. 5 minutes high liquidity supply zone. This 5 minutes high liquidity is also origin for this weekly zone. How many times it is tested? Here, again here, here. And then this entire leg out formation is formed. Maybe the leg-in candle or base candle, some of the base candles picked up the orders. So this 5 minute zone is the origin for this entire weekly zone. That's why it is tested several times, this zone. First time, second time, third time, fourth time. And after that prices moved up. Excellent. Now you should get some ideas in your mind how institutions are really, first they are creating high liquidity zones, using those high liquidity zones as an horizon to their higher time frame zones like 75 minutes or daily or weekly. Okay, next there is one more high liquidity zone, 64. What is that? This is on 5.3, 9.30. One base candle. This is 4. Where is 5? 5.3, 9.30. So that means somewhere here. This is the one. Rally, base rally. 5.3, 9.30. One base candle. Rally, base rally. 5.3, 9.40 is the leg out. This is the one. This is a 5 minutes high liquidity zone. See, the zone is created again, picked up the orders, and then it gave a huge big move. And where it is inside a daily high liquidity zone. Maybe this may act as aggressive trade setup, or maybe any fine-tuned 5 minute zone is there before this. That way it could be a fine-tuned zone. Once you go to higher time frames, you will understand. Any other high liquidity zone here? We have 56935, 5 base candles. 56935. Five six nine 35. What is that? Sorry, 56 2024. I'm seeing 2025. 56 2024 means this is on the results declaration day or maybe the next day. Let's go to the old zone. Probably somewhere any fine-tuned zone we will see. Here. Probably somewhere here the zone should be there. We have already a 15-minute zone here. See here we have a drop, 2 base candles, but this is on 5, 10, 15. But we are seeing on 5, 6, 935. Where is 935? Here. 5, 6, 935. 4 base candles, and this medium size candle is also part of the base. So that way our software drawn this zone. And when it is, this is a 10.5. Leg out is at 10.5. And this 5-minute zone is the origin for this 15 minutes high liquidity zone. This is a 5 minutes high liquidity zone. This 5 minutes high liquidity zone is the origin for this 15-minute zone. From the origin. So recently, when prices reached this zone, see what happened? This is the 5 minutes, where is that? See, from that 5-minute zone, let me draw a horizontal line so that you get better clarity what I am trying to explain. See, this 5-minute zone is the origin for this 15-minute zone. All these order flows are newly created order flows inside the daily and 75 minutes, daily and weekly pierced zone. These are the daily and weekly pierced zones. Inside the daily, weekly pierced zones, the new order flow 75-minute zone is created. Inside 75, we have a 15 minutes fine-tuned zone. Inside this 15 minutes, at the distal line, there is a drop, 5 base candles, rally candle is created. And here exactly at this origin, where the origin is started, there I am drawing a blue color line. So here I am drawing. Why I am drawing? This is the type 1 proximal of 5 minutes high liquidity zone, which is the origin for this entire 15 minutes zone. And 15 minutes zone is the high liquidity zone, is the fine-tuned zone inside the 75 minutes demand zone. This 75 minutes demand zone is created on the results declaration day. This is as per the pierced zone strategy. New order flows in the pierced zone strategies are very strong. Because people leave that zones, pierced zones, because they are not aware of pierced zone concept. Because it is a new concept I developed. So outside people, normal demand and supply zone traders, not aware of this topic. Because they feel like it is a violated zone, they remove the zone from the charts. Institutions knows that. That's why cleverly what they are doing, they are creating a new order flows in that area. And that order flows are very strong. They have very strong order flows. And we should not miss such kind of order flows. So that is the reason why we did this analysis earlier. As I told you earlier, 14th January 2025, monthly analysis, we identified this zone. And recently prices entered into that zone. Look into that blue color line till that area prices reached or not. See here. The blue color line is the type 1 proximal line of 5 minutes high liquidity zone, which is the origin for this 15 minute zone. See, here only prices reached. This is the low. See, Nifty is falling down, falling down, falling down, falling down. Exactly the new order flows in the pierced zone. The 5 minutes area they touched, and see the rally started in the Nifty. Now Nifty is, see here, rallying, rallying, rallying. Of course, some consolidation took place here, and then again it continued. See the rally, super rally now. Rally, 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 rally. That means quickly it is giving you the profits. And from here till here, it gave you 1400 points. That is what we discussed sometime before in this video. And who is the reason? The 5 minute zone. This is the one. The 67. Serial number 67. This is the high liquidity zone. 5 minutes high liquidity demand zone. It was created during our elections declaration day. That day volatility is very high. So sharply prices came down and sharply prices moved up. At the time institutions, see how quickly they created a strong order flow. That order flow today helped us. Helped us means helped Nifty in giving 1400 points. Several times I told these order flows, newly created order flows are very strong. That's why lesson 28, pierced zone strategy, is a very powerful concept. All these are all new concepts. New concepts that I developed. That's why people outside who already completed, because some of you are already learned your supply demand zone courses outside. And you are not aware of all these new strategies. Okay, finally, see how accurately it worked. Okay, now, see, this is everything. Supply demand zone chain is captured all these things. That is the beauty of our NeoStock supply demand zone chain. Okay, now we have identified all the 5 minutes high liquidity zones here. Now let's go to the supply zones. With that we can find the marking. And then finally, conclusion, I will explain how they will be helpful to you. Once you mark, how you should understand for your trade plans. Okay, now where is the demand zone, nearest supply zone? Here, 46. But now I am focusing. See, all these supply zones are important because they could have been fine-tuned 5 minute supply zones in some of the HLQ zones, or maybe some of the daily or weekly zones. But why I am focusing only HLQ zones is they are the real institutional order flows, and fine-tuned zones also real institutional order flows, because you already learned those concepts in lesson 16, zone confluence, you can draw. But these high liquidity zones, how they help, we will discuss as part of concluding this video at the end. But before that, let us mark these zones. So 45, serial number 45, high liquidity zone. This is when 10th February, 9:50, 2 base candles. So here, 10th February, this is 11th February. Before that, 10th February, here 9:50. Our software talking about 9:50 only. Yeah, 10th February, 9:50, 2 base candles. This is the one. So this is the supply zone. This is the high liquidity. It doesn't mean these zones don't work. See here, we have a fine-tuned zone. Rally, base, drop is there that we can make use. It could have been a fine-tuned zone. That you have to mark on your charts. That we will see at the end. Actually, I gave you exercise, but I will show you some examples. Then only you get clarity. First, let us complete this marking. And what is the next high liquidity zone? Here, 43. But this is a pierced zone. Sorry, 42. Pierced zone, I am ignoring it. My focus, the zone should not be pierced. Next one, 40. This is a high liquidity supply zone. This is 6 to 920, one base candle. See, these pierced zones also you can mark high liquidity zones. But there you can apply pierced zone strategies. Any newly created within the zone, you can choose them. But that way you can make use of it. February 920, one base candle. 6th February 920 means somewhere here. This is the one, 6th February 920, one base candle. Perfect. Inside the 25-minute zone, this is the fine-tuned zone. See the beauty again here. This 5-minute zone is the horizon for this entire daily zone. See, this entire 25-minute zone is the horizon, but apart from that, this 5 minutes high liquidity supply zone is the horizon for this entire zone. Excellent, right? So next time, definitely, this is the one will give you a good trade. Of course, before that, these zones will be giving you the trades. Okay, what is the next high liquidity supply zone? Next one is a 39, serial number 39. This is a 5th February 1355, two base candles. 5th February 1325. So that means it is somewhere here. This is the one. See the beauty again. This is the origin for this 25 minutes high liquidity supply zone. 5th February 1355, two base candles, and 1410 is the leg out. But actually you can draw like this. This itself is enough. Why I am saying? The origin is started from this candle. Software will do the calculation, but software calculations point of view, this is not good enough. But for us, okay. See, if you have good experience, sometimes what software may not consider, maybe with your experience you may consider. According to me, this is the balanced area. Maybe from here it started. And this is also 5 minutes high liquidity supply zone. So this 25 minutes high liquidity supply zone, we have 5 minutes high liquidity as a fine-tuned zone and also another fine-tuned at the distal line. Okay. So what is the next one? Above we have, but this is a pierced zone. I am leaving this. And 36 is also high liquidity zone. This is on 6th January at 11 o'clock, one base candle. 6th January, 11 o'clock. This is February, right? Okay, January means somewhere here. 6th January at 11 o'clock. This is 10 o'clock. Yeah, this is the one. We have a drop, base, a drop. Okay. See the beauty. Zone is created, again LOTL, rally base drop. Tested and gave you the good trade. This is the next trading session. Those who are using our supply demand zone chain reports, our existing, because some of our subscribers are using NIFTY supply demand zone chain. Next day, see, they would have got a very good profit. Because previous end of the day, our software identified this. This is 1525 candle. Once market is completed, we generate this report, and they will be getting this zone as a high liquidity zone. See, next day they would have planned the trade at a morning 9:40 candle, and after that, see sharply how nicely it gave and reached this rally base rally target, rally base rally. So this is around 22,637 and entry is 23,972. Sorry, 23,637 or maybe 638. 23,794. Maybe around 150 points move in just 30 minutes. 1, 2, 3, 4, 5, 6, 30 minutes. 150 points move. The power of high liquidity zones. That's it. After that, prices did not come back. Anybody who took short-term traders, still maybe they might have holded, maybe they would have got even more profit from this zone. Yeah, after that again it came, once again. When it gave, again it gave your trade on 5th February. After that again you see again sharply prices came down. Those who hold it for a long period, probably they would have got even more profit here. And see the beauty, this 5 minutes high liquidity supply zone is again acting as a horizon for this entire weekly zone. See, earlier we got an horizon we identified somewhere, right? Where is that? We had drawn earlier. This is the one I think earlier. This was the horizon for daily zone. And this high liquidity zone is the horizon for weekly zone. 11 o'clock. This is the one. 2 times it is tested. This is the first test, the next day itself. And this is happened on 5th February. This is 7th January. After 1 month, prices entered into the zone. And after 1 month, this zone again used as an horizon for building this entire weekly supply zone. See, this is the real beauty of our high liquidity zones as per our supply demand zone chain reports. That's why top-down analysis, if you do, you will see all these things. How our existing previously created high liquidity zones, how they are helping. Not only giving intraday trades, short-term or maybe swing trades also, they are helping you in getting the trades. Okay, next high liquidity zone 32. But this is a PRZ zone, I am leaving it. But above 30, we have a high liquidity zone 1812, 13.5, 4 base candles. 1812, 13.5. This is 1912, this is 1812, this is 17, 1812. What is the timestamp? 13.5. Yeah. See, this is the failed ERC as a leg-in. You have 1, 2, 3, 4 base candles. I think this is also part of the base. Here imbalance started from this candle. 1330. See 1330. So this is a rally base drop. So that way your zone will be like this. Failed ERC, consider a rally because it's moving up almost. Okay. Rally software suggested this as rally base drop. Okay. Rally base drop, higher wick you will be using for your digital line. So already came, and second time, see second time after that, next trading session it came down sharply with gap down. See after that the move, very big move it has given. Who is the reason for this entire move? This high liquidity, 5 minutes high liquidity supply zones. 5 minutes high liquidity supply zones are very powerful. But the location where they are created, that makes the difference. That is important. They are powerful, but their location, based on that we can understand whether it should be used only for intraday trading or it can be used for swing trading. That kind of clarity you will get. When you draw more and more the supply demand zone chains from monthly time frame until the 5 minutes, you get better clarity how to analyze all these stocks. Same concepts you can apply for other stocks like Reliance, you can apply for TCS, you can apply for Infosys, you can apply for Tata Steel. All your favorite stocks you can apply these supply demand zone chain reports. But first time when you are analyzing, it will take time. Definitely it will take 2 to 3 hours time for drawing all these zones. Once you draw, every day what you will be doing, you will be just revising these charts. Okay, this is the 30th is the serial number 30 is the high liquidity zone. Next one is serial number 27. When it is on 17th December, 13 hours, 2 base candles. 1712 time 13 hours. This is 18. See, this is the 1712 13 hours. Drop base drop. 2 base candles. So software consider this is the imbalance here, 13.5. Is it 1712? Okay. Anyway, for me, this is the zone. This is a medium size candle. According to software, this is a medium. I know because I gave a high values. So it look for higher, more ranges, medium size. But according to us, this is okay. This is perfect. And this is considered because the software algorithm, it considers previous candle and next candle, then imbalance where exactly it is started. It is assuming from this candle imbalance started. But actually this itself is a leg out itself for us. So sometimes you have to adjust if you are not convinced with the software selection. Okay, but you see here, this zone is, according to software, you have to draw like this. But this is, according to our experience, this is good for us. This itself is imbalance started from here. Software consider this as a medium size. This is also a medium size. This is the largest medium. This is the smallest medium. Still, why it considered? Because the imbalance is already continuing from this candle here. So gave importance to this. But we as a human, we have better common sense compared to the machines. So that's why I am drawing this drop based drop instead of here. Okay. See, already tested once here, and now again rally based drop is created. And see, this is the entire zone is the origin for this daily supply zone. See, here we have a daily supply zone. For this daily supply zone, this 5 minutes high liquidity zone is the origin. And when our software listed this stock on 17th December, 17th December, maybe end of the day only you will be knowing. So you might have missed this move. Okay, now next trading day is started. Next trading day at morning 9:45 it gave you the trade. See how much profit you would have got, a huge profit on that day. And those who hold it probably further continuation. See big move, how much big move it has given. This is how some of the high liquidity zones are working, especially the locations are very, very important where they are getting created. Okay, next high liquidity zone is 25, serial number 25. This is when 17, 12, 10 o'clock, 3 base candles. Here. Drop, base, drop. This is a 15 minutes high liquidity supply zone. The same thing is also 5 minutes high liquidity supply zone. Same thing. So let me add the extra text. Both 15 minutes and 5 minutes. The same 3 candles, that means they are occupying same space. So that way I can change the color too. But if I change, the text will go. Okay, fine. Let me leave it. And the next, any other high liquidity is 22nd. 22nd, you see, 16, 12, 15 hours, 4 base candles. 16, 12, 15 hours. This is the one. This is the failed ERC. It considered maybe it could be a drop. 4 base candles, 1, 2, 3, 4. 15, 25 is the leg out. After that, this is the leg out. Why? It is looking small. Hide this gap, you will get clarity. Now you see, this is a failed ERC as a drop. 1, 2, 3, 4. You may say, why not this is a failed ERC? Maybe software calculations, this is good enough to consider medium size. You may say this candle length are same. Maybe this is also medium size according to software, but imbalance algorithm might have been executed and confirmed this as a leg out. Because earlier prices moved. Maybe this is medium size, maybe software point of view, all these are all small candles, tiny. See, this is looking like a drop candle, right? Maybe if it is a tiny candle automatically by default it is whatever the way it looks, it is a medium size. Because I zoomed, that means I expanded too much. If you reduce, now you get clarity here. Now you agree this is a tiny candle. Now you see, compared to all the candles, this is a small candle, right? So that's why software compares all these candles with the previous candles. That way it will do it analysis. So is it a drop based drop? See, this is a DBD, drop based drop. So let's draw the zone. So this is the 5 minutes high liquidity supply zone. Inside the 75 minute zone. If it is fine tuned with 15 minutes, fine. Otherwise, you will be planning this as an aggressive trade setup. If it is there inside a 15 minutes, if you go to 15 minutes time frame, then only we know that. Maybe 15 minutes may not be a high liquidity zone. Suppose if there is a 15 minute zone here, that may not be high liquidity zone. If it is a high liquidity zone, I would have already drawn that zone here, right? That we will see later. Next, any 19th. High liquidity zone we have. This is a 512, 14 hours. 512, 14 hours. So maybe somewhere here we have a high liquidity zone. This is 1425. But this is 512, 1440. This is 1440. Failed ERC as a rally candle. You have a base candle, drop candle. Is it rally based drop? Yeah, rally based drop. But which is the highest? This one is highest. Sorry. This is a 5 minutes high liquidity supply zone. Is it tested? See here. It is tested. If I draw week to week, I did not draw week to week. Let me draw week to week. Then it could be horizon, right? This is the horizon. See, this is the horizon to this daily supply zone. See, the daily supply zone picked up the orders from this zone, and it is the zone creation is started from here. And meanwhile, when it is identified on 5th December, and 13th December, it has given you a trade. Our NIFTY supply demand zone chain traders would have took a trade here. See how sharply prices came down after that. 16th September. Sorry, 13th December. This is 13th December closing hours only it gave. But before that, it gave a trade here. Small move it gave. So mostly intraday traders would not have taken. Maybe if short-term traders would have taken, they might have holded, and after that, see, very big move it has given. Intraday traders, it is not a trade because it is at the closing hour of the market. But short-term traders, for them, it could have been a very good move. See, after that, see the market from here to here, how many points? But this 5 minutes high liquidity zone acted as a horizon for this daily zone. Inside the daily, we have a 75. Inside 75, again, we have 5 minutes high liquidity zone here. If any 15-minute zone is there, it could have been a fine-tuned zone. Otherwise, it could have been an aggressive trade setup. This is how our software is helping in creation of the especially high liquidity zones. See how powerful, especially the R_SZ and S_SZ. Unfortunately, we can't identify these R_SZ and S_SZ manually. Manual identification almost impossible. Maybe it is possible, but you have to spend several months of time to find one high liquidity zone. According to the algorithm, if you spend several months' time, then you will identify a high liquidity zone. By the time the zone will expire. So practically it is impossible. Okay, next one is 18 also high liquidity, but it is a PR zone. Next high liquidity is on 12th. So when it was created, this is on 15-10-950. 15-10-950, is it above this zone? No, within the zone. 15-10-915. So probably on this day. This is 945. Oh, 950, yeah. 1510, 950. One base candle and 10 o'clock is the leg out. This is the leg out. See, this is the origin. Again, you see, this is the origin for this entire 75 minutes high liquidity zone. See, from this zone only it picked up the orders. This entire 75 minute supply zone is created. Not only that, the daily high liquidity supply zone also picked up the orders from this zone. See, this is the daily high liquidity supply zone. It also picked up the orders from this origin. Here 75 minute supply zone, this is the origin first. After that, the 15 minutes, even 25 minutes high liquidity zone, all are picked up the orders from this 5 minute supply zone. See, this daily high liquidity supply zone. How beautifully these 5 minutes high liquidity zones are used by the institutions as origins. Probably here any origin, well, let us check. Next, TCO supply zone, again 9th high liquidity. This is a 410, 1220. 410, this is 7, 410. Maybe here at the high, probably this might be acting as a trap. This is 410, 1220. This is the one, rally, base, drop. 1410, 1220, this is a drop, base, drop. Failed ERC, what? No. Oh, sorry, rally, base, rally only, yeah. 9th one. The 9th, rally, base, drop, rally base, drop. 410, 1220, one base candle. Rally, base, drop. So let us stop our analysis here. After that, no, see, all are follow through candles. In case if this weekly zone is violated, probably this will be acting as a trap. This could be a bull trap. It will capture all the orders, stopped out orders, and then push the market down. Because the traps for weekly zones are even much stronger than the daily zones. They give a very big push. In case, if it is successful, we don't know how the market works at the time price reaches here. If completely market changes to bullish, maybe this might be violated. Or people think everybody, all news channels, everybody might be saying you have to buy. Institutions will get huge liquidity. We all will be buying, and the moment it reaches, institutions get the heavy liquidity, and then they will push the market down like anything. That possibility is also there. But how you are identifying all these things? Because you are doing this supply demand zone chain analysis. Based on that only we are able to identify. Without supply demand zone chain analysis, we can't identify high liquidity zones. Especially the S underscore DZ and R underscore SZ, that is support demand zone, resistance supply zones, they are not easy to identify manually. It's like almost impossible to identify. The others, some extent you can identify, the other concepts, TCO zones and all, or TCZ, or even TCP, or controlling demand and supply zones, you can identify at some extent. But these S underscore DZ and R underscore SZ, it is almost impossible to identify. Maybe few you may guess, but not. Few we can guess means maybe high liquidity zones based on multi-testing we may identify. It could be a high liquidity zones, support and resistance, but that may not be the true for every scenario. See, some of these zones are fresh zones. See, this is not yet tested. So without testing, how to identify this high liquidity zone? That is important. So with this we have marked everything. Now everything you see from daily time frame or weekly time frame, it's like a color marking, right? You zoom, you get clarity because we have drawn so many zones. Always you focus on the near to your zone. Near to your zone, what is happening? Near to your zone, what is the 75 minutes demand zone? Here we have 75 minutes high liquidity demand zone. You may get, because it is very close to the supply, near to the supply, use them for our intraday trading point of view or short-term trading point of view. Because swings will be there, that way you will be getting. But this 75, we didn't have any 15 minutes or 5 minutes zones. So what to do? Go to 75 minutes time frame. What happened? Internet is down. It's connected. Okay. See, this is here you have a 75 minute zone is here somewhere. Yeah. Rally base rally is there. But inside 75, we don't have any 15 minutes high liquidity zone or 5 minutes high liquidity zone or even 25 minutes high liquidity zone. We don't have. There is no rule that we should have. But 75 itself is a high liquidity zone. That way it got the value. But it is near to the supply zone. What you do, you plan only short-term or maybe intraday related trades, such kind of zones. So what you have to do, where to buy? You already learned fine-tuning the zone. Those concepts you are already aware, lesson 16 concept. So go to the 15 minutes time frame. Check inside there is any 15. Is there any 15? Yes. We have a 15 minute zone is available. We have a drop, base, but this candle is somewhat doubtful whether to accept as a base candle. Because this is a large candle, failed ERC. But can we consider failed ERC as a leg out because the body came out of the zone? Maybe you can consider. If that is the case, how you draw the zone? 15 minute zone, you draw 15 minute zone like this. Okay, within this 15 minutes, is there any 5 minute zone? Then you can plan, otherwise zone will be violated. See, is there any 15 minute zone? Not very clear. Maybe drop, base, drop. If you draw, can you consider a leg out? Then zone is coming big zone. Risk management is not possible. Then how to plan? Maybe 3 minutes any possibility we can identify. See, 3 minutes is also not much difference. Moreover, you can't use a leg out. So that means this zone we can't use. Easily this zone will be violated. This 75 minutes high liquidity zone. If at all anything will happen, here you have an horizon. 75 minute zone is having an horizon, right? Probably this may work. But this horizon also went close to the distal line. Again risky. When prices goes very close to the distal line of this horizon, this is dangerous. Higher chances it will violate. So better avoid this. Leave this entire analysis. Not useful. Maybe it is like a trap for us. Institutions created a high liquidity kind of zone, but actually they are trapping with us with this. So that's why we are always looking into fine-tuning the zone up to 5 minutes. So this is not a good zone, so we are leaving it. But here we have a 5 minutes HLQ demand zone. Inside, supply zone. Can we use? Yes, you can use it for intraday trading, but you can't use it for other than short-term and all, you can't use it. It is risky. Here we have a high liquidity zone. 5 minutes high liquidity zone. Go to 5 minutes. We have a drop 2 base candles. Type 2 proximal I have drawn for fine tuning. We have 25 inside. 5 minutes high liquidity fine tuned zone. This 5 minutes is a fine tuned zone inside 25 minutes zone. Why? Because the 25 and 5 minutes we have 5 candles gap is there. 5 minutes candle. So 3 to 5 candles we can use. If anybody is using 25 minutes, your fine-tuned zone inside 25 should be 5 minutes. And 25 can be used inside 125. See, the sequence could be like this: 125, 25, 5 minutes. That sequence you can use. I think I already explained this sequence in lesson 15. Lesson 15. Okay, this you can plan for intraday trading. Once this is violated, the next planning will be probably here. Okay, here inside 75 we have, let's go to 75. This is a 75-minute zone. Failed ERC, rally, base, rally. Inside you have a 25-minute zone is there. So inside 75 you have 25 area. Within this 25, even 15 also same. Now within this area you should have a 5-minute zone. Otherwise zone will be violated, higher chances. Now you check, this is having any 5-minute zone inside this area. See, all these candles are base candles, right? Rally, sorry, base, 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 base. Where is the leg out? That means this zone will be violated. Maybe if at all, if this zone works, here you have an option. You have a rally, base, rally. This is the origin. Probably you can use this zone. Rally, base, rally. But why we didn't identify? It's not that we didn't identify. Maybe this zone might be there in our list. But it may not be high liquidity, identified as a high liquidity zone. But I told you lesson 22 concept, whether it is high liquidity or not high liquidity, many times these zones works very well. So this lower time frame zone as an origin, because this is inside this 25 minutes, 15 minutes high liquidity zone. This is overlapped with the 25. That means this is a fine-tuned zone only. Excellent. This is a fine-tuned zone. This 5-minute zone is a fine-tuned zone because this is overlapped at the distal line and both together inside 75 minutes high liquidity zone. Only thing is it is overlapped at the distal line. Rally, base, rally. Let's check in the report. This might be there. When it is, this is 30 March 1055. Sorry, 20 March 1055. 20 March. This is all supply zones, demand zones. March 10.5. 20 March 10.5 we have. But this is 10.55. Why software did not identify this? There is a reason. I will tell you. Maybe this leg out is not sufficient enough for our software calculations point of view. Maybe little short of whatever the parameters we set. Maybe that is the reason why it didn't identify. But manually we can identify this. So that's why I told you in the beginning, sometime before also in our video, I told you the 5 minutes and 15 minutes time frame, I used high parameters. Because I am used high parameters, HLQ zone identification, the effectiveness is high. That's why many of HLQ zones are giving good trades for us. If I reduce those parameters for identifying these small zones, it will impact identifying good zones. So that's why I'm not setting those. But manually we can identify them. Rally, base, rally. Okay, risk management of you, if you want to manage, still you can add up to this level. So this you can, so that is the reason why see, every time while fine tuning the zones, I am not taking the help of our NeoStock supply demand zone chain. Why manually I am doing while fine tuning the zones in every HLQ analysis videos? Because I know the 5 minutes parameters, I set high values for identifying the zones. Especially my view is with the view of finding as many as possible high liquidity zones with effectiveness, having effectiveness. So that's why high liquidity zones, 5 minutes, many times we are seeing huge success for them. So I don't want to, because my rest of the things manually I can do. What we can't identify manually, high liquidity zones we can't identify manually. That's why preference I have given, especially 15 minutes and 5 minutes. Because 15 minutes and 5 minutes, the volatility in the market will be very high, intraday point of view. All of a sudden movements, up and downs will be there. So due to that, if I set high values, high parameters for identifying the zones, of course the disadvantage when I set high parameters, some of these small zones we will be missing. That is okay. Ultimately what we want is zones that gives profits to us. Identifying zone is not important. Identifying the zones that gives good profits is important. So this is the reason why 15 minutes and 5 minutes separate settings will be there in our software algorithm. Okay, fine. This is the way. That's why I'm telling you, you have to do this work manually, fine-tuning the zones. Actually, I gave a homework to you, but again, I'm doing the same work. Because at least hoping that some people who did not properly land and attending this video, at least you should not get confusion. So here below we have 5 minutes. Maybe it will act as a trap. Institutions, once it is violated, all stopped out trades they will exit, but institutions will capture all from this high liquidity zone. And similarly here you see 25-minute zone. This is inside daily zone. Inside this daily high liquidity, the same daily zone is also acting as 125 as well as 75. That means this is a daily as well as 75. So now we should look into either 15 minutes and inside 15 5-minute zones. See here we have already identified drop, base, rally as a 15-minute zone. Inside this 15 we have fine-tuned. This is the fine-tuned zone. This is the work we did some time before. So we have a fine-tuned 5-minute zone here. In the dark color is fine-tuned 5-minute zone. I didn't give label to fine-tuned zones. But this is the why I didn't give labels, because this is the work I want you to do. But still I am helping you. Okay, and here we have high liquidity zones are there. But again here any 15-minute zones are there? Let us check. See, here you have a 15-minute zone, drop, base, rally. The 15-minute zone is here. And this 5-minute zone is the origin for this 15-minute zone. So that way this 5-minute zone you can give a lot of importance. And not only that, here also you have a 15-minute zone, drop, base, rally, and this is at the distal line. And here you have again a 5-minute zone is there. Low priority HLQ zone. Is it having any fine-tuned 15-minute zone here? Which zone is it? This is 75 minutes high liquidity zone. Inside a daily zone. And in this 75, 15-minute zone is here. Probably rally, 3 base candles and rally. That means your 75 and 15-minute zones are almost same. Rally, 3 candles and rally, that way. And here you have a fine-tuned 5-minute zone, which is the low priority high liquidity zone. But anyway, the actual origin is this is the one, 5 minutes HLQ zone, origin. From here only it is picking the orders. Ultimately you have to plan your trade in this 5 minutes. See, when it comes to 5 minutes, LOTL zones are there. You should always give importance to the source. This is the main source. We always call it as an origin. This is origin, you will be giving priority. From here it will move up. Next, see here you have a 5-minute zone, but is there any 15-minute zone here? Yes, you have a rally, 1, 2, 3 base candles and then rally candle. And for this 15-minute zone, this 5-minute zone is the origin. And moreover, this is the high liquidity zone. So that way next time when prices are entering, you can plan a trade here. And what about here? Any 75-minute zone is available inside this daily zone. Let us look into 75 minutes time frame. The 125 minutes. Is this the one we are discussing or something else? All of a sudden it changed. Oh, sorry. So this is the one. Daily 125 and 75 all are same. And this is the 5 minutes and 25. And here we have 125 minutes zone here. Rally base rally. Here we have 75 minute zone. Inside 75 we have 5 minute zones. So go to 5 minutes now. Okay, only 5 minutes point of view, intraday traders point of view, what we have to do? Wherever 5 minute zones are there, you can plan long trades in the intraday point of view. Your confidence will improve if those 5 minutes are there inside any higher time frame zones. Why confidence? At least you have some guarantee that definitely this zone will. See, every time when we are taking a trade, we know even though it is a high liquidity zone, still we have some doubts in our mind. Is it going to really work or is it going to be stopped out? That way we feel. Many times high liquidity zones work, but there are times they will also fail. But that failure rate is less compared to the other zones. That is the only point you should understand. So always look into the 5 minute zones where they exist. See, here it is exist. It is not a fine-tuned zone in any, but still why we are giving importance to this zone? Because this is going to work as a trap, bear trap for this 75 minute zone. Similarly, here you have a 15 minute zone is there. 15 minute zone, you can plan intraday trades by fine-tuning to 5 minutes. See, this is the fine-tuned to 5 minute zone. Drop 2 base candles and a rally with hidden body. So next time when prices comes to this 15 minute zone, in the fine-tuned 5 minutes area, we will plan our trade. So here also we have a 5 minute zone, but in the 5 minute zone again overlapped with another 5 minute zone. Here risk management is big problem for us. So such kind of things, maybe decision making is very difficult. Maybe take deep inside this lower one, where it manages your risk. Otherwise, you can ignore this area if you still feel risk is very high. The next one, this 5 minute zone, this is inside the 75 minute zone and this act as an aggressive trade setup. That way you will be planning your trade. See, this is the decision making for intraday traders. Here you have a 5 minute zone. This 5 minute zone is acting as an origin to this entire 75 minute zone, HL, high liquidity zone. So you don't want to miss such kind of zones. See, when you draw the zones, you are getting clarity. Is it just a 5 minute zone or is it a fine-tuned 5 minute zone or is it a horizon to some high liquidity zone or a higher time frame zone? That kind of clarity you are getting here. That way, your confidence will be improved while planning the trades. See here, this 5 minute zone. What you can do, risk is high. You can plan like this. Actually, if you ask my decision, I say I consider this as a leg out because the imbalance started from this candle, and I consider this as a follow through candle. But software calculations, this is within the medium size candle calculations. That's why I kept the zone inside the zone, kept this candle inside the zone. But manually I will convince. This is okay. But what is the advantage I got now? Risk is minimized. My trade planning is very easy. See here, if I would have taken a trade here, how quickly I got the profit. My risk is also small here. So these are the advantages you get sometimes when you take manual decisions. And same here also, this is a 5 minutes low priority, this is a fine-tuned zone, inside 75 minutes demand zone. That way people plan the trades, drop base, rally. And moreover, this is a 5 minute zone. Now how we will plan the trade? We will plan the trade once prices enter into this level. I will not take my entry here. If I take my entry, see my stop loss will be below this. So it's a huge risk. Maybe risk could be beyond 2% also. So that's why intraday point of view, I will ensure prices reach this area. And then I will plan. I consider this is only LOTL zone. LOTL, what is the advantage for us? LOTL, it confirms that new order flows are added into this zone. Because generally, when a zone is tested several times, you get a doubt in your mind. Maybe already tested 3 times or 4 times. Maybe this zone may violate this time. Let me avoid the trade. That kind of doubts you will get in your mind. But the moment you realize it is a LOTL zone, then immediately you understand maybe some more new order flows are added into the zone. Confidently you plan your next trade. Okay, LOTL zone means, do we have 100% guarantee the zone will work? See, there is no 100% guarantee. If supply is much stronger than this existing demand, what will happen? The zone will be violated. We have to prepare for that situation. That's why we are using risk less than 2% level. But chances are high to get success. It doesn't mean it gets 100% success rate. No, nothing 100%. In stock market, any analysis, anybody is saying 100% success rate you get, you cannot believe that. See, after doing so much hard work, we were able to bring success up to 80% level. But even few months earlier also we have seen, we got success rate only 75%. But overall average we are getting more than 80%. There are times you see more failures in the market, especially during trend changes taking place. At the time, lot of failures you will see in the zones. And see below we have again another 5 minutes high liquidity zone. But this is inside a daily high liquidity zone. So as an aggressive trade setup, you can plan a trade here. Now let's go to the 15 minutes time frame. In the 15 minutes time frame, this 5 minute zone, having any 15 minute zone is available here. Yes, 15 minutes rally, 3 base candles rally. This will act as a origin. That way you understand this 5 minutes is the origin for this 15 minute zone. And if the 15 minutes is inside your daily zone. 75 minute zone may not be there, otherwise we would have already drawn 75 minutes. And rest everything is here, what you already know. The 1 year back, not 1 year, during elections day, last zone, elections declaration day, zone is pierced, in the pierced zone, newly created order flows. That's why we have drawn this blue color line here. See, from there it picked up and the entire move started. So that means below blue color line, this is the 5 minutes high liquidity zone. The same thing you do for even supply zones also. See, here you have supply zone, 75 minute zone is there. In this 75, is there any fine-tuned 5 minute zone? That is what you have to see. So, because we are this is the 75 zone. Yeah. Inside this 75, Is there any 15-minute zone? Yes. You consider this as a rally, maybe this is a rally, 2 base candles and drop. I told you do this work, but I am doing on your behalf again. So this is a 15-minute supply zone. Rally base drop, this is the 15 minutes. And this 15 minutes is a fine-tuned zone. This is a fine-tuned zone. Let us check, is there any software identified in this? Because my parameters are high, sometimes some zones might be missing 15 and 5 minutes, normal zones. But let us check whether this is identified by our software. When it is, this is a 10th February, 14:45, 10th February. So in the supply zones, Tenth February or 10th March, this one. 10th February. 10th February. This is a 5-minute zone, sorry. Now we have to look into 15 minutes time frame. See, I need not generate, but just for confirmation. Is there any supply zone? Sometimes some supply zones might be low priority, high liquidity zones, which we haven't drawn. We did not draw. So supply zone started from here. So 7th February. Okay. See, sometimes why software does not identify. We compromise and we draw the zones sometimes. See, maybe this leg out is a base candle. This is also a base candle. This is also a base candle. That means, see, this entire is the zone. If this entire thing is the zone, leg out is inside the zone. It is not a valid. So, software point of view, there is no 15-minute zone. But we compromise sometimes. Maybe software may identify this as a base candle, but we compromise some extent. Okay, this is a, maybe according to software it is a tinny candle, but according to us it is a medium-sized candle. You got the difference? That way some zones might be missing from the chart, from the chain, but we will be thinking it is a valid zone. That's why understanding software calculations are not easy. So only high liquid, that's why I am focusing mainly on the high liquidity zones, only on 15 minutes and 5 minutes time frame, because they are 100% accurate. They have higher success rate. Remaining zones manually we can identify. Once we identify 75 minutes, because 75 minutes until 75 minutes time frame, whatever the parameters we are using, they are normal for all the time frames. Only 15 minutes and 5 minutes I changed the parameters, so that we can identify more accurate high liquidity zones. Okay, maybe let us assume software point of view it is a base candle, but I can compromise. I can say, okay, this is a minimum, this is a leg in. Why I am compromising here? Price moved in a narrow range. Here imbalance started. That is okay. Even if leg in is not very accurate, I still compromise and I can draw the zone. Only 5 minutes level we don't compromise. Within this zone, this area, if there is a perfect fine-tuned 5-minute zone, then definitely we can plan a trade. Why we are giving? Because this 75-minute zone, this is a 125 minutes high liquidity zone. Sometimes you can look into 25 minutes. If you are considering 125, it is like 25 minutes. See, this is a rally, 2 base candles and a drop. Follow through candles. See, this is the 25, almost same as 15 minutes zone. Go to 25 minutes time frame. And when is this candle? This is on 10th February 14:15. Okay, 10th February 14:15 supply zones. See here, perfectly. 25 minutes identified, right? 10th February 14:15, 2 base candles and 11th 9:15. because it is inside the 125 minutes high liquidity zone. 125 minutes, the best combination is 125 minutes, 25 minutes and 5 minutes. So let me draw this. Software is also suggested. This is a supply zone. 14, 15, 2 base candles. This is a rally base drop. See, rally base drop. Excellent follow through candle is also there. That is what also our software see, leg out with follow through. See the strength, leg out with follow through, perfectly our software identified. Now this is the 25 minutes. Inside 25 minutes, we should have a fine-tuned 5 minute zone. Let's go to 5 minutes time frame. See, this is the 25 minute zone. Inside 25 minute zone, we have, maybe I can consider this as a drop candle. Maybe rally candle, 1, 2, 3, 4, 5, 6, 7 base candles are coming. If you consider all these are all base candles. How our software identified this zone? Let us check. If software identifies this as a drop candle, no issues. This zone will list. If software identifies this as a rally candle, software would not have shown you this list because 7 base candles are there. But we will check at 5 minutes time frame. This is on 10th February 1450. All these are all supply zones. Okay. 10th February 950 it identified. 1450 it did not identify. That means software would have considered this as a rally candle. 1, 2, 3, 4, 5, 6, 7 candles and drop candle. See, now you see the candle. Are you convinced that this is a drop candle? Not 100%, right? Because body is less than 50%. It is a medium size candle. So maybe you consider as a base. Maybe it is a little bigger. We might have considered this as a failed ERC. Software did not consider this as a failed ERC. Otherwise, this zone might have been listed. When you have these doubts, how do we have confidence that this zone we get success? If you are convinced, what you do? You draw a zone like this. If you are convinced this is this is a failed ERC, I will convince. Then you will convince this is a fine-tuned zone. Next time you plan your trade. This is because this is only the nearest one to the current closing price. See what happened? Really worked? No. See, this is violated. Zone is violated. Now prices came down. Why prices came down now? Because your institutions created rally base drop. Again drop base drop and further pushed. From this drop base drop, it picked up and it moved down. Not very strong. Maybe that is the reason why our software is not really listed this zone. At least it should have been listed as a pierced zone. But still this 25-minute zone is valid. Why it is valid? Because 25-minute zone is not violated, not yet violated. Went near to the distal line. Now institutions created rally base drop and drop base drop. Maybe this rally base drop our software won't identify because it is looking like a medium size candle. Look into the zones identified by our software here. The 46 it identified a zone and 21.3, 13.20, one base candle. 21.3, 13.20. Where is 13.20? This is 13 hour. This is 13.10. This is 1320 rally based drop. This is what software identified. Even this one also software did not identify. Maybe still software point of view, it is a medium size candle. That is what I told, because I gave more higher ranges. If I would have reduced the ranges, software would have identified. If I reduce the ranges, identifying high liquidity zones, especially 5 minutes and 15 minutes, accuracy will go down. I don't want to compromise on that, because that is the area giving good money for us. If you are convinced in our manual way of thinking, you will draw anywhere, draw the zone. But 5 minutes and 15 minutes, they are more important for identifying high liquidity zone. See, this one is identified rally based drop, maybe not identified as a high liquidity zone as on the current situation. Maybe future it may be identified as a high liquidity. As on now, the software algorithm calculations, this is not. But intraday it gave a test. But at the closing of the market, that's why move is limited. Who knows, maybe Monday it might be violated, the next trading session. Got it? Okay, that means we have a fine-tuned zone. Okay, let me draw. Why it worked normal zone? Because it is a fine-tuned zone. This 5 minute zone is a fine-tuned zone inside the 125 minutes high liquidity zone. That's why one test it already worked. If you convinced this drop based drop, this is also already worked. See here, it picked up the orders and moved down. Maybe last Friday you might have identified this as a dynamic zone in the live market. That way you might have taken a trade and you would have got some decent profit here. Because already you have drawn 125 minute zone, you have drawn 25 minutes high liquidity zone, but 5 minute zone is not clear there. Now in the market, a drop based drop created. If you are convinced with this leg out in case, you would have taken a trade. If you are not convinced, probably you would have drawn this zone. This is a clear zone because we have a very good leg out, rally based drop. Even software also identified, and even that gave a test, but limited profit it gave because it is almost at the closing hour of the market. These are the dynamic zones you should identify in the live market. So that way you have to fine tune all the remaining zones and identify the fine tuned zones to trade opportunities. So this is a daily high liquidity supply zone. Here we have a 75 minute zone. And any more 75 minute zones here? No. Maybe if they are there, we would have already drawn. Look into this 75 minutes time frame daily. Are there any 75 minute zones here? No. Even in this daily also. Here 75 is there. Already we identified 75. But here also 75 is there. Good. Here also 75 is there. Maybe same daily zone is like a drop, 1, 2, 3, 4, 5, drop. Same daily and 75 might be same. And 15 minute zone. Once you draw 75, what is the next step? Inside 75, 15 minute zone should be there. Okay, within this zone, which zone is it? This is a daily high liquidity supply zone. Within this zone, area no 75. That is what we are discussing. We are searching in the wrong place. Yeah, actually we are searching in a wrong place. Sorry, I'm sorry. I wasted your time. Okay, within this entire daily zone, are there any more 75-minute zones? No. This is the only one. You may say, can't we consider this? Maybe. This is a drop, 2 base candles and drop. Is not considered. When is this? This is on 10th February 25. 10th February 9:15. This is the one, 10th February 9:15. Then 1, 2, 3, 4, 5 base candles and drop candle. And why we did not consider this drop 7th February? Is there any 7th February candle? 7th January is there. 7th February did not consider. Maybe this is a drop candle, medium size. This is a rally candle, medium size. Because the wicks are small wicks. Bigger body, more than 50%. Maybe body could be more than 60%. That's why software did not consider. There is no proper zone here. Okay. So these are the 5 minutes high liquidity zones. So you can plan your trades directly. See, this is how supply demand zone chain analysis you will be doing. But maybe I did a very deep analysis. Some of you might be seeing so many order flows, may get some confusion in the initial stage. I do agree with that. See, so many. Managing all these things in the charts is not easy. So that's why what you can do, you draw a small parts rather than drawing from 50 monthly time frame or weekly time frame. You can start drawing from nearest daily zone you take. Between the daily zones, you draw the zones and then you plan your trades. But for me, why I am doing this entire monthly? Because we need to have a bigger view. See, this entire thing is the bigger view. For the last 3-4 months, this analysis may holds good. See, when we drawn our monthly zone analysis 14th January, this is 22nd February. So that means almost 3 months. Still this monthly zone is valid, and all the last 3 months many trades we got from this zone. So that's why for a long-term point of view, the bigger analysis is required. But initially, as a learner, you are in the initial stage, you start doing this analysis, supply demand zone chain analysis from daily time frame. Within the daily, you draw 75 minutes. Within the 75 minutes, you draw 15 minutes. Within 15 minutes, you draw 5 minutes. That way you do. Still, you feel daily is also looking a big complicated, then start with 75 minutes time frame. But at some point of time, you have to do bigger analysis. When you do bigger analysis, when you are seeing from the complete view, it is looking like it is a complete. We are not understanding anything by seeing this. So that's why you zoom. Go to a most recent zones level. This is the recent demand zones are here, recent supply zones here. Focus on them. If they are violated, focus on the next zones. Focus on the below zones. Because this analysis remains the same until these zones are violated. Once any zones are violated, remove those zones from the charts. If a new zones are created, add the new zones into the existing analysis. When new zones will take place immediately at 5 minutes and 15 minutes. So directly go to the 5 minutes. 5 minutes, it is much easier for you to understand, because in the price action, clearly you can see. Here you have a 25 and 5 minutes fine high liquidity zones. Similarly, here you can understand the supply zone. What are the immediately available zones? Here you have a 5 minute high liquidity supply zone. Some people, intraday traders, what they are doing? They are just drawing only 5 minutes and 15 minute zones, and they are planning their trades. Only high liquidity zones they draw, 5 minutes and 15 minutes. When prices reach, they plan their trade. There are some of our existing users, they are planning their trades like that. Only 5 minutes high liquidity zone, or 15 minutes high liquidity. Inside 15 minutes high liquidity, fine-tuned 5 minute zone. That way they are planning their intraday trades. That is also you can do. That way also. See here, you have in their charts you will see only these zones. This is a 5 minutes high liquidity zone, and this is the 5 minutes high liquidity supply zone. Between them only they will be planning the trades. You all get clarity once your experience grows, but at this point of time, this is how you should analyze the chart with the help of a supply demand zone chain. Because today we did a big analysis. Generally, I won't spend more than 1 hour in this analysis, but today more than 4 hours. We already maybe 5 hours, close to 5 hours, this video training I took. That means I want to know how deep you can do this analysis, so that so many observations you can make. How exactly lower time frame horizons are getting created, the importance of those zones. I want to bring that clarity. That's why I did such a deep analysis. So any doubts you have, you please put them in the comment section. Next time I will be doing monthly bank nifty analysis. I will not be doing this much deep in that video. I will make it much simple and easy for you to understand. Okay, any questions, please put them in the comment section. I will take a break here and we will continue with our next session. Thank you.